the HVDC project, large HVDC project, $1 billion kind of projects. We used to have one project in every 4 to 5 years, but that projects are coming for bidding almost every one project per year. So that's the kind of momentum of shift is happening, the technology adoption, those kind of things in there. So transmission and the renewable is definitely need to watch. And the electrification standpoint, electrification is also another one, whether electrification in terms of the transportation sector or industrial sector is fueling the growth in that. So these are the three things. Revenue attrition, as you know, we are a late cycle business. If you take an order to convert into revenue, it will take anywhere between 12 to 15 months, depending on the product lines, things like that. That's why we are saying a strong order growth will fuel the sustainable, growth of our company, and that's how we are focusing on that. And if you recall, I told you also in your own channel that we are taking a lot of actions to grow higher than the market average, and we have also consistently been growing in the last 3 years. That's why our order backlog is more than 7,000 crores, which will continue to yield revenue growth in the going forward.
Can you put a number to it, Mr. Venu? You're saying strong order book growth. Can you just put a number? Your order book grew 50% last year. Should we expect another 50% this year? Some rough number ranges help.
No, numbers I don't like to put it. What I can tell you, I give you pointers. The market is growing right now with a high single digit or very close to double digit. So we want to grow higher than that, and we continue to do that. One is the domestic market.
You'll grow at 1.5 times, sir? You'll grow at 1.5 times the market? 2 times?
No, I don't want to put the number into that, but that's what our take is, that we want to grow higher than the market. That's number one. And
all right, but you'll outgrow the market, so we'll take that on board. Mr. Venu, even the last time as well, we spoke, you were sounding quite optimistic on business. And the positive for me is in your last quarter, that's quarter four's numbers, the March quarter, the margins came in at the highest we've seen, I think, in the last 12 to 13 quarters. Could you tell us what is the scope of improvement from here on? And I believe that in the next couple of years, by 2025, you have a double-digit margin target. Is that correct?
Yeah, what we said that by end of financial year 25, so we wanted to win a double-digit operational EBITDA level, and that's exactly our backlog is building up into that. And the last year, as you know, the margin has impacted is mainly because of the shortage of the semiconductors and then chips, etc., which go into the bulk of our product lines across the businesses, and that has affected. But we're still not out of those things yet. But I think things are becoming better, I would say, and those things should reflect in the later part of the year.
Okay, all right, Mr. Venu, we will leave it on that note for today. Thanks very much. We look forward to more detailed conversation next time around. Thank you for joining in. That's Hitachi Energy striking an extremely buoyant and optimistic note about the business this year. Well, let's just go back to Lupin for a bit. The stock is cooling off because it had that 5-6% rally yesterday, and it's been running anyway over the last couple of months. Ekta, in fact, has been in conversation with Nilesh Gupta, MD of the company. Let's find out some more details on this big approval that's come in for Spiriva.
Yeah, ready? Mr. Gupta, thanks very much for joining us. Well, I wanted to start with the biggest opportunity, or one of the biggest opportunities. Congratulations on the approval for Spiriva generic in the US. Give us the dynamics. How much do you think you can probably make from the drug?
We never talk about this. I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. And obviously we're the only generic at this point of time. So it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch it the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI, now there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow out of this one. Thankfully we've toughed out. We've been saying that, okay, this is the bottom, this is the bottom, this is the bottom, and the bottom kept going lower and lower. I think we saw that in Q4. We're seeing that in Q1 as well. We're back to that 170, 180 million dollar kind of number, and that number is a solid foundation to build on with products like this.
Okay. $850 million in terms of US generic sales by FY25.
Yeah, I think that's a pretty fair number. We should be able to do that and maybe some more.
Is US pricing pressure, is the worst behind us? Because Lupin at one point even exited some drugs.
Yeah, we exited quite a few products, and we were not the only ones. There's a whole bunch of people who exited a bunch of products, primarily around the oral solids. I think the supply continuity seems to be more of a conversation. I think pricing will always be only downwards. So there's all, I think we guide for high single-digit kind of pricing erosion that will remain.
And margins, you have improved in terms of margins. I think it was a 6-7 quarter high. How much more do you think you can do in terms of margins now? Exit run rate was 18% is what you guided for.
Yeah, we would still hope for that. I think certainly we want to get back to that. We're pitifully low. So there's a lot of room to improve. We're actually bottom of the pack, and we're not used to being underperformers. So there's a lot of room for us to grow. I think we already saw that from Q4. You will continue to see this improvement every quarter, and the exit remains, north of 18%.
Okay, Nilesh, quick last question. What is the larger picture for Lupin? Because you have seen some rough times in terms of the US pricing, compliance issues, but now with this approval, with Suprep in your portfolio, albuterol, all of these key, larger complex generic drugs, where do you see the larger picture for Lupin if you're talking, say, 1 to 2 years down the line?
Sure. I think the larger picture is clearly the pivot to complex generics, doubling down on India, and starting innovation again. And I think that has to be, because all of this is sticky compared to just regular generics in that sense. So I think the pivot from oral solids to complex generics with products like this is happening, but there's a lot more to be done. Injectables, we've not even started. I think you've seen a lot of approvals from injectables, clearly more to be done there. India, obviously we're doubling down. We added 1,000 people. We're going to keep adding, and we're going to keep growing in India, and then definitely restart innovation at some point.
Thank you, Nilesh. Always a pleasure. Thanks very much, and congratulations.
Thank you.
All right, that's the big man at Lupin giving us more details about the big drug approval which the company has got through. The market is like 2 points lower, nothing. 18,854 is what we have, but Midcaps is where the action is. We'll have to take a break, and after we do that, we'll come back. Midesh will be with us with some technical trading ideas, and we'll highlight what's happening in that mid-cap and small-cap part of the market. Stay tuned.
This is the best gift to Mumbaikars. Thanks to Maharashtra government
thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives. Once these two metro lines start fully functional,
Welcome back. Well, the market's as quiet as can be, well, virtually unmoved as we speak. The Nifty bank, though, is showing some bit of traction. That one, in fact, is up close to around 50 points. And Max Financial and Piramal Enterprises, both of them have moved to the high point of the day. Mitesh Thakkar is back with us to give us his call on the markets as well as individual stocks. Mitesh, welcome back. Go ahead.
Well, the call on the index remains same. I think, we are in a sluggish mode, range-bound contracting. So not much of action over there. But on the stock side, Balrampur Chini has come on the focus today. I think sugar anyways is having some kind of positive news flow with the shortage of production globally. And today there's some kind of breakout on the charts of Balrampur Chini. Disclaimer that we have some call options position over here, so vested interest is there. I would recommend buying here with a stop below day's low of 398.5 and a target of 425. And HDFC Limited was a call yesterday. I would be comfortable buying it today as well. Keep a stop just below levels of 26.95 and a target of 27.60 is what I'm doing.
Okay, so those are Mitesh's calls. Mitesh, just want to get your incremental take on a couple of more metal names. We've seen some consistent weakness on the likes of, Tata Steel, JSW. They've been kind of struggling for a bit. Any trades on the short side that you would look at taking at all?
So I think, Tata Steel is something, which is given a kind of a gap down today. JSW Steel, I don't want to short. The structure is very good over here. But Tata Steel, I think, I would want to see if it starts getting towards the low again. And if it starts breaking today's low, then I think with a stop at 113, I think, this can be shorted for a decline toward levels of 106, 105.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of stocks then that are moving around as we speak. Vivek joins us to tell us about JSW Energy. Antique, I think there's a double upgrade coming out there. Vivek, tell us more.
Well, that's right. JSW Energy is the stock in focus today morning. A double upgrade coming in from Antique on the stock. So they've gone ahead and upgraded the stock to a buy rating now. The target price has been kept at 316 rupees a share. Couple of key points that they highlight that they believe will hold JSW Energy in good stead. Number one, the company is, they're saying that the company is on its way to commission close to 10 gigawatts in FY25, half of its stated FY30 target. Or the other thing what they're saying is that this 10 gigawatt commissioning will actually go ahead and yield the company close to 7,500 to 8,000 crore in EBITDA by FY 2025. Also, the company is making rapid strides in energy storage from battery, pumped hydro storage, significant announcements being made there, as well as the green hydrogen segment. In fact, what Antique is saying is that the ROE was earlier depressed because the group believed in lower capital allocation and faster debt reduction. However, they believe that JSW Energy will reach 8,000 crore EBITDA by the end of FY25 and along with that, interestingly, the recent acquisition that JSW Energy made of Mitra Energy, they believe that the run rate of the EBITDA there has improved tremendously. The company is on its way to now generate a net run rate of EBITDA of close to 1650 crore, and that makes the acquisition valuations, earlier which was looking at around 7 times EV to EBITDA, now close to 6.4 times EV to EBITDA. So even below what a new greenfield expansion would have been. So on the back of that, the double upgrade has come in and the stock is rallying in the session today.
Okay, got that, Vivek. Thank you very much for that. Well, let's focus on Z once again. Z has been fairly range-bound today. Surabhi is joining back in because there are just so many moving parts to this story. Surabhi, so tell us the latest. I guess today's fresh news is the statement that Mr. Puneet Goenka has made to one of the papers.
That's correct. So he is, interviewed with one of the papers, and in that he said that merger is of the utmost importance to him, and the merger should go irrespective of the fact that if he is the CEO or not. He further added that merger will benefit 96% of the shareholders, and therefore it is in the larger interest of the ecosystem for this to go through. Now that statement, along with Sony's statement yesterday that they are committed to the merger and they are keeping an eye on the SEBI developments, all of this should bode well for Z.
Okay, all right. Thanks a lot for that, Surabhi. Well, Sonal joining in to tell us about Paradeep Phosphates. You have a big brokerage call coming out there. Sonal, tell us more about it.
Oh yes, so Antique has initiated coverage on Paradeep Phosphates, and they are quite bullish on the stock as well. They have a target price of 100 rupees per share on this one. So what they say is that it is the second largest phosphatic fertilizer player in the private sector, and post expansion that the company is undertaking, their fertilizer capacity will go to 1.8 metric tons from current 1.2 million metric tons. Acquisition of Zuari Agro's Goa plant is something that will aid to the market share as well, and also increase profitability of a particular platform as well. They believe the company has one of the strongest business models in the phosphatic fertilizer space, and this is something that they can build on as well. They value the company with at a valuation of 12 times one-year forward earnings, which is a 20% discount to the other big phosphatic fertilizer player, that is Coromandel International. They have a buy rating with a target price of 100 rupees per share. On the back of this, we are seeing some excitement in the stock today.
All right, plenty of excitement. Sonal, thanks a lot for joining in and telling us that. Big volumes out there. The stock is spiking up close to around 6% as we speak. Some flashes coming in on IPCA. They failed to establish adequate quality control for a particular unit. I think these are details that are coming. We've got the US FDA observations to IPCA Silvassa unit. So that's why that stock has moved to the low point of the day. It started off in the green, but now it's slipping on the back of these observations that are coming out. 3 observations, and I think they'll flash for you on the screen in terms of what those observations are. Failure to thoroughly review any unexplained discrepancy. Well, that's one of that. Responsibility and procedures for quality control were not followed. So it appears the street is not taking this very, very well. Explains why the stock has moved to the low point of the day. But from the banking pack itself, there are a couple of stocks that are under pressure. Abhishek joins us to run us through a note that's come in on IDFC First Bank. Morning, Abhishek.
Morning, Nigel. So CLSA has written on IDFC First Bank they have downgraded the rating to underperformance from buy. However, they have increased the target price to 85 from rupees 80 that they had earlier. They say that IDFC First Bank has been one of the best performing stocks given the fact that it's outperformed Bank Nifty by about 30-35% on a YTD basis, that is year to date basis. So while the bank's compelling growth story is very good, and they think that the valuations at 1.8 times price to book value on a one-year forward basis do not reflect the fully ROE profile margin that will improve on a year ahead or a 2-year ahead story. So they expect a 14% ROE for IDFC First Bank by FY26 versus the 11% that the bank has reported in Q4 FY23. So hence the run-up with valuations is not in line with ROE is what CLSA has mentioned.
Okay, got that, Abhishek. Thanks very much for the details. Well, let's now focus on the big cue that, of course, came in from the U.S. In his testimony before the U.S. Congress, Fed Chair Jerome Powell reiterated the central bank's tightening measures are yet to take full effect and hinted at more rate hikes by the end of the year. Take a look.
I guess I would say this economy is very strong, and what's driving it now is just a very strong labor market. There's still significant demand for workers. There are more job openings than there are unemployed people. Wages are moving up. And that's really what's driving the economy forward. People's disposable incomes are coming up. Inflation is moving down gradually. The thing that troubles people, and I think the thing that accounts for the surveys you see where despite a historically strong labor market, people are still concerned about the economy, it's really inflation. So this is our job, is to bring inflation down. The way we do it is by raising interest rates. And while that can be painful, what it does is it gradually slows down demand so that supply and demand can get back into alignment, and so that we can have inflation running at 2% and people can get on with their lives and basically not have to think about inflation. The level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process, speed was very important. It's not very important now. We were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're moderating that pace. So we only have one interest rate to raise or lower. It's not true, but mainly one main interest rate to raise or lower, and it applies to everyone. But I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back down to 2% over time.
All right, with that, we are going to take a very, very quick break. On the other side, it's a special segment. It's the economy. Today, Lata gets chatting with Ashish Gupta, CIO at Axis Mutual Fund.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production, Today we have almost reached nearly about 850 million tons. And
Welcome to It's the Economy. Even as the stock market indexes dither near all-time highs, the bond markets have exhibited unusual swings by bond market standards. In March, remember, the 10-year bond yield ruled as high as 7.46 in the first week and over 4% in the US on steaming inflation numbers. But by May, the yields had fallen to below 7% in India, 6.94 on a day, and below 3.5% in the US. Again in June, the yields have seen a sharp rise on fears that the Fed is not done with rate hikes and that the Reserve Bank is nowhere near a rate cut. As far as rate sensitives go in the equity markets, the surge in bank stocks is now getting replaced by a surge in NBFC stocks. To get more perspective on where interest rates are headed, where bond markets, NBFCs and other rate sensitives are headed, I have with me someone who perhaps is the last word in the interest rate market and on financial institutions. Ashish Gupta, now in a new avatar, Chief Investment Officer at Axis Mutual Fund. Ashish, thank you very much for dropping in.
Thank you for having me.
Made an appearance in your new avatar. Okay, so first up, exactly this question. You know, we saw yields fall almost 50 basis points after the February rate hike by Reserve Bank and after the budget. But now a bit of it has been given up. What is your view? Do you think that we have more to see rate increases, yields increases?
Actually, I think particularly if we talk about India, I think we can be a lot more confident that we are past the peak in rates, right? I think where the question lies is what is going to happen in terms of the pace of rate cuts. I think even global yields, yes, Fed has indicated there are a couple of more rate increases possible, but long yields I think are at peak or close to peak. I think the recent increase in yields that you have seen is probably market realizing that the rate cuts will not be as quick to come as it had anticipated. So back in March, I think as first signs came that the inflation is rolling over, people started, I think, too quickly building in that rate cuts will also come on back. I think if you look at US inflation, it has been a bit stickier than expected, and particularly core inflation. Therefore, I think people are now kind of getting more pragmatic that rate cuts will not come as quickly, and that's why I think you have seen this recent pickup in yields. But I think we can be fairly confident that peak of rates is
past both in the US and in India. Certainly in India, 7.46 is not in anyone's book. But what about the recent increase from 6.95, the 10-year has come to 7.0607 in the last 2 days. Is there more to go? Because somehow the arithmetic now is looking adverse. The big buying by insurance companies, whatever lagged money they got last year appears to be over now. HDFC Bank buying is over now.
So I think short-term movements are also driven a lot by really demand-supply dynamics. If you see in the month of March, all of us in the bond markets as well as insurance companies really had a spurt of inflows because of the tax changes. So I think there was some bit of pre-buying. Also the government's new borrowing calendar started to kick in now. So I think it's more to do with these short-term variations rather than really a view that on interest rates fundamentally changing.
Okay, no, I take your point. There was in the debt market tax caps also were not there. That 20% advantage we had was gone. So I guess all of you all had a lot of money as of FY23, March 31.
So I think there is data out there.
You think all that money is run out now?
Yeah, so basically, I think some of the buying got upfronted because the money came in quicker in March rather than coming over a couple of months.
Fair enough. But even now, is there space for yields to rise more simply because there is an El Nino fear hanging over our heads? And at least the monsoons from a Bombay point of view are looking a bit scary. So can this fear push up yields? As well, I don't think in the second quarter there are too many redemptions. Even if you look at the GSEC calendar, clearly issuance is far more than redemptions. So can we go to like 715, 720? Is that a possibility?
So we are actually not expecting that. I think, yes, there is some risk to inflation because of El Nino. But again, the magnitude that is being talked about is 20-25 basis point. And if you look at inflation in India, the last episode, actually it was primarily driven by WPI. So it was WPI dragged CPI up. If you recall, last year WPI went into double digits and that took CPI up. If you see recent prints of WPI, they are actually negative, right? So now actually WPI is dragging CPI down. So we are not really very pessimistic about inflation in India. I think RBI has got it right that inflation is rolling over.
Downward trending, perhaps the peak is over. 6.5 is the repo rate. That is clearly the concern. But when is your first rate cut penciled in?
So we are actually hopeful that by the year end we'll get at least one rate cut. I think
that is fiscal or calendar?
Fiscal year.
Okay, so Feb or March.
Yes. But I think more than really inflation, but we are looking at growth, right? And I think RBI will watch for growth. So if growth starts slowing perceptibly, I think that is something that might trigger more action in terms of rate cuts rather than just inflation.
Time permitting, I'll pursue this a little more because the governor sounded very clear that until he sees 4, he is not, I mean, that's his goal.
Yes.
And their own forecast for the fourth quarter is 5.2.
Yes.
So, I mean, it didn't look like February when he was speaking.
But I think their forecast of growth is probably stronger than our forecast.
Yeah, that's right. Okay. Where do you stand, by the way, on growth?
So we don't have an official forecast, but frankly, I think India getting 6.5% growth has really happened in a weak global environment, right? So I think the last time we saw was only in 2009 when economy grew at more than 6.5% when global growth was weak.
That's a little difficult.
Yes.
Okay, I want to quickly come to NBFCs and banks since you are the high priest in that area. We are seeing a lot of offerings from NBFC and the mood in the equity market is that a long cycle starts.
Yes.
Would that be a fair point? I mean, as a CIO, also you have to take a call on NBFC paper.
No, so actually in some of our funds, we are overweight NBFCs. I think we have seen both on the asset quality cycle, NBFCs lag the banks in terms of recovery primarily on account of two segments. They had a high share of real estate loans and on microfinance. If you see data over the last 9 months, even on those two segments, asset quality has stabilized, delinquency levels have actually come down. I think that is also giving more confidence to NBFCs to start growing. And if you see March quarter was the first quarter where NBFCs growth started matching bank growth. Otherwise, NBFCs were growing slower than banks.
Yeah, actually, I think in the fourth quarter, some of them have grown faster, maybe twice the clip of banks. But basically, would you, as a fixed income, investor or chief investment officer, would you prefer that people go into more corporate paper? Is credit more reassured now? So, why would you go to a Government of India paper? Is it a better deal?
No, I think corporate credit paper is very, very comfortable at this point of time. I think if you look at all leverage matrices across the corporate sector, that is comfortable. Even as we are seeing CapEx being planned by corporate India, we are actually not seeing that being planned so much using leverage. So most of CapEx is coming through accruals or equities. So we are actually fairly comfortable about corporate risk at this point of time.
How long do you think this NBFC cycle can run? We just yesterday had a JP Morgan paper saying that this NBFC cycle looks like a 4 to 5 year cycle. It looks as good as that?
So I think we have to really look at NBFCs individually because I think we always find that people who know the segment well are able to gauge the quality of credit they are taking. And we are already seeing, so for example, in segments like unsecured loans, there's a large gap in the delinquencies you are seeing between traditional lenders and non-traditional lenders.
Okay. So you'll pick and choose over there. And what about banks? Final question, since we always turn to you for banks. Is it like the NIM advantage has run off and you have question marks on growth? So even loan, both volume and margin could be under pressure this year? At least that's the behavior of the stocks.
Sure. No, I think you will see some moderation in both, right? But I think where the margins are, they are very, very comfortable. So even if they come off a bit, I think banks are going to be a lot more profitable than they have been in the last 10 years. And thankfully, the markets are also not pricing in very high NIMs for the banks. So the valuations are actually also very moderate, even for the largest banks in the country.
Okay, so banks and NBFCs for the picking. That's the word coming from someone who I regard as the high priest of the financial sector. Unfortunately, out of time, we have to wrap up on Bazaar. Chartbusters up next, and let's see if Chartbusters or Trading Hour is lucky to get the all-time highs.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
Those are
Very, very close to the fresh all-time highs on the Nifty. Just 10 points away. Maybe in the next 30 minutes on Chartbusters, we'll be breaching those all-time highs that we last saw on December 1st. The mark you're looking out for is 18,888. Well, a whisker away, but time will tell, Mangalam, in the next few minutes whether or not we get there.
Time will tell. 137 sessions is what it took the Sensex to go ahead and hit a fresh all-time high. For the Nifty, if it does it today, will be 138 session. We got perilously close today as well, just 2 points away from an all-time high. And thereafter, there was a bit of a whisker. We're down now just about 10 points away. So let's see whether that comes by or not. This is Chartbusters. As we speak, we will keep an eye out on the Nifty, the markets, and you can rest assured that we will be celebrating once Nifty does cross that mark. But up until now, all the top stories that we're tracking this morning. Delivery rallies after nearly 2 crore shares changed hands in pre-opening session. Sources tell CNBC-TV18 that the PE firm Carlyle's unit has sold stake in the company.
Another block deal today. Sunset Engineering gains over 70 gains after more than 74 lakh shares change hands around 835 rupees a share.
Indiabulls Housing Finance and India Cements are removed from the F&O banned list. Indiabull trades higher while India Cements dips about 2.5%.
Emami gains as Goldman Sachs issues a buy rating with a target price of 500 rupees a share. The brokerage believes the EBITDA growth from FY23 to FY25 is likely to be higher than the last 6 to 7 years.
Paradeep Phosphates and JSW Energy surge as Antique issues bullish reports on both. Sets a target of 100 rupees on Paradeep Phosphate. Also, double upgrades JSW Energy to buy with a target of 316 rupees a share.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, let's kickstart the show with the first guest on the show. We have Forgings. They saw export orders on the overall sales for FY23 at around the 34% odd. That compares to around 48% in the previous year. Meanwhile, 80% of their revenue growth is seen from the commercial vehicle sectors. To discuss more about that and how is demand shaping up on ground, we're joined by Mr. Krishnan, who is the Vice Chairman as well as the Managing Director of the company. Morning, Mr. Krishnan. Thanks so much for joining in. Always good speaking to you. Well, I believe there's a big push on ground and some reports are indicating that Forgings wants to be a big player in the EV space. Yavast has been changing your business style for the last few years or so, and you've mentioned about that transformation. Tell us, in terms of EV revenues, this year, what do you end at? And the next couple of years, how do you scale that business?
Morning, Nigel. Great to be here. Our EV business started off with the acquisition of Abhinava Raisel, which concluded last September, as you all know. And today we are starting up manufacturing in the next quarter, in Q2 of this year. So this year we will probably just, have some revenue, just notch up some sales. It won't be zero, won't be anything to talk about. But over the next couple of years, we see this as a huge potential.
Potential, sir. Can you quantify huge? It's good. This EV push is great and it's good to hear, sir. But, we are on Chartbusters. Wherever you join, we try to egg you on for some numbers. And this time around as well, we want to be successful. So tell us in the next 2 years, what do you see these EV revenues move to? And say in the next 5 years as well, if you could give us a rough number.
Yeah. We have to walk the talk. Definitely. We are into the EV powertrain space, by the way, Nigel. That is to say that we look at controllers, which takes power from the battery and feeds it to the motor. The second part is the motor itself that takes electric power from the controller and turns it into rotational energy. And the third is the gearbox, which steps down the speed to the requirement of the wheels of the shaft.
Right.
So overall, we see this to be a 2,000 crore enterprise by 2030 or even higher.
That's for your business or the industry as a whole?
No. That's for Forgings as such, for Abhinava.
Forgings itself. I mean, that's incredible, right? Because you have targeted 1,800 to 2,000 crores revenue for your business coming in FY24. You expect your business to be about a 2,500 crore business in a couple of years from here. And 2,000 crores, if that comes in from the EV business itself in 2030, what are you looking at the overall Forgings business to be?
Very simple. At that point of time, we should be looking somewhere in the region of 5,000 to 7,000 crores.
All right, 5,000 to 7,000 crores in terms of revenue.
Very conservative level. 2,500 crores in the parent business and 2,000 plus on the electrical side would easily translate to something in the region of around 5,000 to 7,000 crores.
5,000 to 7,000 crores. We would, presume it is more towards 7,000 crores because 2,500 will happen in the next couple of years itself. So if that grows organically, so, closer to $1 billion in terms of overall sales. But I'm sure there would be a lot of other competitors in this space, the EV space that you're eyeing as well. And what gives you the sense that you would have the right to win here and actually get to the 2,000 crore sales mark?
Mangalam, as you rightly said, nobody has a right to win. It's all in the market space and it's slugfest. So we'll have to fight our space out, 100% sure. The only point is that we are a very serious player and we are starting off with 6 years of solid engineering by the Raisel team.
So does that fight mean it will come at the cost of margins? Just wanted to understand.
We don't believe so. Whatever the industry settles down in terms of margins, that will be the margins that Abhinava Risal will also have to work with in terms of overall performance. So that's not a matter of concern. So we've kind of taken in a wide range of margins, which at this point of time, I'm not at this thing to disclose. But wherever the industry settles at, we'll be there.
All right, Mr. Krishnan, getting to 2,000 crores sounds phenomenal. And we wish you well on that. And obviously, your shareholders will be more enthused by that number. But everything involves money, right? How much investment will you have to make to scale this 2,000 crores of EV revenues itself?
At a ballpark, we would be looking at about 500 to 1,000 crores over the next 5 years.
500 to 1,000 crores to hit.
Crores. Yeah, 500 to 750 crores. Sorry, Nigel. 500 to 750 crores over the next 5 years.
Okay, all right. 500, 750 crores. Sorry for coming in there, Mr. Krishnan. But, you know, if you're going to be putting in 500, 700 crores, is there a possibility that you have some such ambitious plans? You look out at carving out another unit, maybe getting in an investor, getting someone with some technical expertise, and then looking to scale it up? I mean, just a thought, given that you're looking to scale up this business to such a large extent.
Yeah, all that is on the cards. All that is on the cards for sure. That is on our list. We have to walk the talk. We have to get our act up and start pushing for sales. And once it happens, well, whatever the business needs to launch and go global, we will do it.
That is all the cards. We understand. But what exactly is all that? If you could define, you know.
It's too early stages. Two stages as yet. You know, we are in startup mode. So a startup always wants to scale up, right? And it does whatever is required to scale up. Simple.
Right. But, you know, just to talk about the cards a bit, you have all the cards, you're keeping them close to your chest is what I would say. You say that a startup wants to scale up, but earlier startups would grow at the cost of profitability. Now, after the funding winter, a big decline that we've seen in a lot of these new age business valuations, everyone's looking at profitability at the cost of growth. Where in this matrix would you be?
I have gone on record earlier in this channel itself, that I don't believe in this growth at the cost of profitability theme. See, if a business doesn't make profit at 100 crores or 1,000 crores, how do you expect it to make money at 10,000 or 50,000? I mean, it's ridiculous. Okay, unless not every company is a Google. Or an alpha. It's very unlikely that we can spawn such companies ever so often.
Okay.
So that model simply won't work. And we have discussed that with the Abhinava Risal team from day one, that Forgings is not a venture capital fund. And they were also very, very clear. I must say that the boys, though young, had very clear ideas on how to grow the business. And I said, look, this is an industry. And industry means industriousness. It takes time. So we are like the farmers of...
Right. Mr. Krishnan? Yes. Yes. Mr. Krishnan, how do you look to fund this? 500 to 750 crores? You know, as of now, I think... Yeah.
Sorry. I thought I finished.
No, go ahead. Please go ahead, sir.
We're looking at raising this largely from Forgings as of now. And as said earlier, if there is a requirement for capital that Forgings cannot field, definitely at that point of time, we will ensure that Abhinava Risal has a growth path.
Okay, very quickly then, just to revise the guidance you've given us for this year, in terms of tons, you're looking at 90 to 95,000 tons. Revenues of close to around 1,800 to around 2,000 crores with margins of around 19%. Have I got all those three numbers correct?
Yep, Nigel, as always.
That's the guidance for this year, and we're going to keep tracking this EV drive, sir. You've given us a fair idea. Wish you all the best, but we'll be holding you to these numbers as well.
Right, and just, you know, before we let you go...
I have a small disclaimer. Of course, we will discuss the numbers, and but I also would like to mention that, you know, these are projections, and yes, that's what the team is working for. 100%.
No, we understand that completely. I mean, no one can future-proof their business. These are projections based on what things are as of right now. Just a quick one. You said you're looking to invest and you're looking at startups. I mean, you're looking at this business as a startup. Is any sort of further investment in other places also a possibility? Any further M&A in this space?
Not as of now. Not as of now. As of now, we are looking at growing Abhinava Risal in an organic manner. We will be acquiring technologies that are required to achieve the substantial levels over time.
Yeah.
And those
All right.
But by and large, MM Forgings will fund.
All right, not a very largely traded stock in terms of volumes, but the street likes what you have said, and for the time being, the stock has moved to the high point of the day. Good speaking to you, Mr. Krishnan. Well, time to slip into a short break. Up next, we'll be joined by Sachidanand Utekar of Trade Bulls to get a technical check on the markets.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But
Big moves in the mid-cap end of things, even as the market, the frontline index meanders around record highs. We have AB Fashion and Retail moving to the high point of trade. Balrampur Chini is the other one, which is surged to the high point of trade as well, and giving it company is Bharat Forge. So a bunch of stocks actually doing well, notwithstanding the mid-cap index mildly in the red right now. But for the Nifty to hit a fresh record high, the key player would perhaps be the Nifty Bank. And Sachidanand Utekar joins in precisely for that trade setup. Sachi, your thoughts on the Nifty Bank and the stocks that you have on your list for us today?
Good morning, Mangalam. Mangalam, I think the focus should be on Nifty Bank for the last two trading sessions. We have already seen some improvement in its relative strength. But if you look at the equation right now, we have ICICI Bank, which has rebounded strong. We have Axis Bank, which is again trending near its life intraday high. And HDFC Bank has already displayed a strong breakout. So I think the momentum should be witnessed from Bank Nifty itself. We are expecting that this particular momentum should take it towards 44,300 during the day itself. And that's why we are recommending building long positions here with a stop loss somewhere close to around 43,720. These are the spot levels that we are eyeing on. We may see Nifty, scaling towards 18,920 during the day. But I think the closing could be somewhere below that. So the record high that we are seeing, I think that particular day is today itself, the equation is right. When we look at the constituents, I think ICICI Bank performance has been really good. We've already seen a strong breakout on the 30-minute scale from its falling channel formation. The price action is indicating a probable target of around 952 on a positional basis, and that's why we are advising building aggressive longs here with a stop loss at around 926. The other pocket of strength is the gas stocks. We have already seen some momentum in IGL. The entire setup looks like a fresh breakout on the weekly scale from a flat pattern formation, which is a continuation pattern. We're expecting a price target of around 520 on the higher side. Intraday target could be around 505, and that's why we are also advising building aggressive longs here. The stop loss for the trade should be placed at around 485.
Okay, Sachi, thanks a lot for that. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nandesh Shah of moneycontrol.com joins us to talk about a stock that he's tracking rather closely. Nandesh?
Hi, today's ideas for profit is IMFA, which is one of the leading integrated producer of ferrochrome in India, which is primarily used in the production of stainless steel. It has a production capacity of 2.84 lakh tons of ferrochrome and a smelting capacity of 190 MVA. It has two captive chrome ore mines in Sakinada and Mahangiri in Jagpur, Odisha, along with the thermal and a solar power generation capacity. March 23 quarter saw improved performance on the back of higher volumes, realizations, and lower raw material prices quarter on quarter. The management is waiting for the Utkal Sea coal block valuation report, which has been allocated to JSPL through the e-auction mode. IMFA has invested around 370 crores and do not expect any write-off from it. And the compensation from the coal block is likely to be received by the June 23 or the September 23 quarter. We expect June 23 quarter performance to be higher than the March 23 quarter on the back of higher realizations, volumes, lower raw material cost, and power cost. The company has proposed a 1 lakh ton per annum expansion of ferrochrome at Kalinganagar, which is expected to be completed by the second quarter of FY25. We remain positive on IMFA, and currently it is trading at around 2.2 times FY25 earnings.
Noted that. Thanks a lot for that, Nandesh. For the time being, though, we'll slip into a short break. Come back, continue to focus on markets and stock-specific action.
Incredible. I mean, obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also.
We moved mildly into the red for the Nifty, just below the flat line. The Sensex down about 40 odd points. So, biding its time before we move on to the record highs. The Nifty Bank, however, is doing well. It's holding up with relative outperformance. One of the stocks which is doing well today is Emami, and that's on account of a Goldman Sachs note which has come in. They have a target price of 500 rupees on Emami with a buy rating. So an 80 rupee upside is what they see from current levels itself. Why is it? Because of two tailwinds that Emami has going forward. One, rising rural demand, hopefully gradually improving rural demand, and secondly, moderating input costs. That would mean margin expansion. In fact, they expect that over the next 2 years, the EBITDA growth for the company could be higher than what it has been over the last 6 to 7 years. However, in the near term, there is some sort of weakness in their summer portfolio, and that will weigh down their first quarter performance. But their non-summer portfolio is likely to see healthy growth pickup. So that's what Goldman Sachs says. But Nigel, the two other good drivers for them would be the male grooming business for them. In the fourth quarter, that grew 29%, and they invested in a company called the Man Company, which did revenues of upwards of 200 crores in the last fiscal, and that is likely to grow to 40 to 50% in this year itself. So over and above that, if they're seeding these new portfolios, then that could be, what do you call them, handsome gains, pun unintended out there.
And well-groomed gains.
Well-groomed gains, let's put it that way.
Okay, all right. Well, we've completely run out of time on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year, our total production was around nearly about 834, 89. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well. As far as thermal power plants are concerned, little more than 34 million ton of stock is there in thermal power plant, which is almost sufficient for 13-14 days. And
Hi guys, good morning and welcome to Trading Hour. I'm Pavitra, with me is Surbhi, and it is yet another day when we went very close to that record high levels, within 5 points of that level, and then we've seen a slip from there. It's been a near 35 point kind of slip from the highs for the Nifty. There you have it. So we've moved back into the red as well, and today the broader markets are really not, the Midcap index at least is just not participating. It is down around 30 points right now, and it has been underperforming for a while now. The banks, however, are holding in the green. So the Nifty bank right now, just some minor gains, but it is holding up in the green for now. You have names like HDFC Bank, ICICI Bank, which are the bigger ones, and really sort of helping a little bit right now. But Surbhi, once again, 35-point fall from the highs.
I think we came in just 1 or 2 points from that all-time high level. I think every time there's 18,088, the moment you cross 880, the problem really starts. But I think look at that. Look at the slide that came in. We were practically there at 18,887, and then suddenly there was a slip back coming in. Of course, the global setup hasn't been helping. We heard a slightly hawkish commentary from the Fed chair last night, and basically a reiteration that the Fed is looking to do more hikes towards the latter half of this year. That kind of worked its way in the US markets. We had a very negative kind of a handover, and Asian markets have also been pretty listless. Anyway, just to come to our picture here on the screen, the trends are hard to spot. The one that I can definitely hold out on is that despite the slide that's coming in on the market, the auto side of the market is seeing some buying again. We had a couple of days of profit taking on autos, but the buyers are back. So Eicher, Hero MotoCorp, Mahindra & Mahindra, even Maruti for that matter, these are the pockets. These are the stocks where you're seeing some interesting gains. And most of them, look at that. These stocks are still at the day's high, though the market itself is struggling. So auto is a strong pocket of the market. You have HDFC Life. That stock has been gravity defying forever, and that's continuing even today. But that's pretty much where the good news starts ending, because on the weak side of the screen, now let's pull up the contribution chart on the Nifty. You'll find IT is a big culprit today. Last couple of days, we've been blaming the banks, but it's actually even IT today. So TCS, Infosys, these are names that are keeping things under pressure. Wipro is down. Most of your large cap IT names are on the lower side. Lever as well. So basically, it's even Steven, Pavitra. I don't know. I mean, let's see, it's Thursday, so the expiry factor starts playing out, whether we get some sort of a move. But right now, absolutely directionless.
Oh, absolutely directionless. And you were pointing out the IT names. There was a big fall in the Nasdaq also overnight, right? Yeah. So I mean, names like Microsoft, Alphabet, you had Intel's here near 6% fall. So perhaps all of that weighing on our on our own IT markets as well. The midcap IT space will also come up for you. There's some cuts over there, but one space that is really popping today, even in this very flat market, is the entire sugar pack. Look at the gains coming through over there. You have names like Dhampur, which are up almost 5%. Whichever one I look like, Balrampur is up, Sri Renuka, Ogar Sugars, Mavana, Awadh Sugars, all of these. So some sweet gains coming through over there. But other than that, it's a very flat screen that we have for ourselves right now. We'll get more, market specific in just a while. But let's talk about some of these individual stocks which are moving around. And actually, there are a whole host of them on the back of brokerage calls. We have JSW Energy, Paradeep Phosphates, as well as IDFC First Bank, which are moving in trade on the back of these brokerage calls. So Vivek, Sonal and Abhishek are all here from our research team to fill us in with the details. Vivek, let me come to you first. JSW Energy is seeing quite a move, 3% over there. So take us through what has come through from Antique. Double upgrade?
Well, absolutely right. It's a double upgrade, from Antique on JSW Energy today morning. They've gone ahead and increased the target price to 316 rupees a share. What they're saying is that the company is well on its way to go ahead and commission almost 10 gigawatts by FY25, half of the company's stated FY30 target of around 20 gigawatts. Now, what Antique believes is that this 10 gigawatt commissioning by FY25 will go ahead and yield close to 7,500 to 8,000 crore in EBITDA for the company. And in fact, what they're saying is that the company is also making a lot of rapid strides as far as energy storage is concerned, especially from the battery pumped hydro storage as well as green hydrogen. Now, going forward, what they believe is that ROE, which was earlier depressed, as the group actually believed in lower capital allocation as well as faster debt reduction, that too should see some improvement. Mitra's, the recent acquisition that the company made, run rate has improved significantly after the acquisition, and JSW has made it a lot more efficient. So at this point of time, the acquisition valuations for Mitra look at close to 6.4 times, 1 year forward EV to EBITDA, as compared to 7 times, 1 year forward EV to EBITDA for a greenfield project. So it's a very significantly positive acquisition, and the ramp up and the operational efficiency introduced there is something they believe will hold JSW in good stead. Along with that, what they're saying is that the green hydrogen as well as the solar module manufacturing segment is something that will hold the company as a sweetener going forward.
Okay, all right, Vivek, got that. Thank you very much. The JSW in focus today, and the stocks are reacting well to those inputs. Let's move on to another one that's in focus, and that is IDFC First Bank. This is a stock that's under pressure because CLSA has downgraded it. Abhishek Kothari is here to tell us why. What is CLSA's problem with this, Abhishek?
Well, the problem lies between the ROE trajectory and the valuation is what CLSA has mentioned in their report. So CLSA has downgraded the stock, that is IDFC First Bank, to underperform from, buy that they had earlier. However, they have increased the target price to about 85 per share from the earlier 80 rupees per share. IDFC First Bank has been one of the best performers on a YTD basis or year-to-date basis, given the fact that it's outperformed even Bank Nifty by about 35% over the last 6 months. While the bank's growth story is compelling, however, the valuations of 1.8 price to book value on a 1 year forward basis do not fully reflect the unfinished journey towards the ROE improvement that they are forecasting. So in terms of their forecast, the ROE is expected to reach 14% by FY26, and they have also mentioned in the note that ROE was around 11% in Q4 FY23. So there is a bit of valuation versus the ROE trajectory is what has made CLSA downgrade the stock to underperform from the buy rating that they had earlier. Back to you.
All right, Abhishek, thanks a lot for getting us all of the highlights of this report. The stock is down around 5%. But one stock which is really surging in trade today is Paradeep Phosphates. This after Antique initiated coverage on the stock. So Sonal is here with the details. Sonal, what do they have to say on this one?
Well, they are quite bullish on Paradeep Phosphates. They say it is one of the second largest phosphatic fertilizer player in the private sector. And post expansion of this particular facility, the capacity will go to 1.8 million metric tons from 1.2 million metric tons. The acquisition of Zuari Agro's Goa plant will also lead to higher market share here and will lead to higher profitability for the company. They believe the company is one of the strongest business models in the product that they work in, and their target price here is 100 rupees per share, and the stock is reasonably priced as well at 12 times FY25 EPS, which is at a 20% discount to the other player, that is Coromandel International in this space. Quite bullish here, and the growth prospects, according to Antique, will lead to the fill-up in the stock that we are seeing today as well, and they expect further move from here.
All right, Sonal, Vivek, as well as Abhishek, thanks a lot for joining us and filling us in with all of the highlights that came through and these stocks that are moving on the back of brokerage notes. With that, we're going to get into a short break. But on the other side, we're going to discuss what's really going on in the commodity space. There's been quite a move in the crude space as well. So Manisha will join us with that update.
I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since.
Welcome back. You're still tuned into Trading Hour, and while our markets are not really giving us too much to talk about right now, let's get a check on how things are moving in the commodity space. Manisha joins us. Manisha, there was quite a move on the crude prices.
Oh, well, yes, Pavitra. Almost $1 of a gain, and we are trading steady right now at $76 a barrel in the markets there, and there are various factors which have been supportive. To begin with, it has to be about the U.S. crude inventories, which have shown a decline of 1.2 million barrels. Markets were anticipating a much lower decline there. So a decline means better demand, and that has been supportive. On the other side, there is a lower crop shortfall this time, or rather a crop shortfall when it comes to corn and soybean, and that has taken these prices to multi-month highs. Now, what this means is that with these crops coming in lesser, they would be used more for food and feed and not for biodiesel. So that would mean that the blending would go down and the crude oil demand in that sense would be on the higher side. And the markets now also are looking at cues coming in from the OPEC and allies cut. Even the U.S. production has continued to decline because we have seen the oil and bricks come down as well. And then the U.S. dollar index trading just at around 102 has been supportive as well. The only thing that you've seen a bit of a decline come in for the crude is after the Powell testimony, which does talk about further rate hikes, a couple of them more as the inflation continues to stay higher. But for the week, we are headed higher for the crude oil prices.
Okay, got that. Thanks very much, Manisha, for the updates on that. Do stay on because we also want to talk about sugar. Now, sugar stocks have been surging higher in trade, and we were discussing this on the show just yesterday, right? That there has been this big price rise, 11-year highs on global sugar prices. Yesterday, one of the Indian companies told us that even in India, prices have now started firming up to about 35, 36. What is the latest on sugar?
Yeah, Sylvie, this is one area which will see further gains is what most of the Indian and international sugar traders tell me. While the international prices have been on the firmer side, the Indian prices in sense of sugar have gained up between 5 to 6% for the month of June, with an expectation that the delayed monsoon, the sowing is very slow, and if it is going to be an El Nino year, the sentiment clearly has gone very bullish for the sugar there. In any case, the street was anticipating that next year you wouldn't be exporting more much in sense of India. So the International Sugar Organization also now says that they are looking at a much lower surplus for the next season. And if India is not going to be exporting, then the international markets in any case have run up because of that as well. For the Indian market also, the North Indian demand has been quite strong. And this is a month end. And most of the mills actually have sold their sugar quota already. So that is what is keeping the prices on the higher side. The biodiesel divergence of cane would continue. There are higher targets being set for the coming years. So everything does look quite sweet when you look at sugar as a sector.
All right, Manisha, thanks a lot for getting us that update on both the crude prices as well as on sugar. But with that, we're going to get into a short break. When we return, we're going to speak with the management of E-Clerx to discuss their business outlook. The last time we spoke, they were mentioning that there's been a bit of a slowdown. So we'll ask them how bad things really are when we come back.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year,
Welcome back. Well, let's turn our spotlight on to a corporate conversation that we're going to have, and the stock on our radar is E-Clerx Services. Let's look at the stock's performance first. It's been a bit of a mover over the last 1 year, but the bulk of the move has happened in the last 1 month. That's, of course, E-Clerx today. It's flat with a positive bias. Stock didn't do anything. It was actually underperforming. And then something changed in the last 1 month. And you've got this 27% kind of an increase. Now, the change probably is about the leadership. And that's what's gotten the market quite excited. Kapil Jain was appointed the group MD and CEO of the company towards the end of May. And this is the first non-promoter appointment that we've seen at E-Clerx. So, well, let's actually bring in Srinivasan Nadhur, the CFO at E-Clerx, to talk about some of the more intrinsic business internal dynamics and the market's expectations. Srinivasan, thank you very much for joining in. So I'll sort of cut to the chase. I think the market's expecting this management change to infuse a new lease of life in terms of the company's operations. If you look at the fourth quarter, growth was fairly muted. What is the sense that you're getting now? What's the new agenda? Has this change already set in? And what are we expecting in terms of the growth this year?
Thanks for having me on the show, firstly. I guess Kapil is still settling in. It'll take a couple of months or maybe a little more before He decides what he wants to do in terms of strategy, where the areas that he wants to focus in, and what his direction towards growth is going to be. At the moment, he is still learning about our business. I think he's very familiar with the BPM business as a whole. But in terms of what E-Clerx specifically does, that is something a little new to him. So he's settling down, he's understanding the business, he understands what is driving us. He's meeting a lot of clients. So I guess we will know what his strategy is and what the direction for the firm is in maybe a couple of months' time.
Okay. Well, Srinivasan, he's also come in at a very interesting time, right? You all had an absolutely flat quarter. The commentary was fairly muted about sort of clients sort of being a little hesitant. Now, has that changed in Q1 or is it more of the same? And, what is the differentiated approach that you perhaps think will the company take, if at all, as we go later down this year?
So Q1 is likely to be as soft as Q4. If not, maybe there may even be a slight decline quarter on quarter. And that's because, as we had spoken earlier, the macroeconomic environment and the discretionary spend from client continues to remain challenged. However, we think that H2 should be good for the industry as well as for us. So we hope to see some recovery in the second half of the year.
So Q1 and Q2 should both be soft?
Q1 for sure, likely to be soft. Q2 things are still playing out.
Okay.
Too early to comment, but let's see.
Okay, last time we spoke, I think you'd also mentioned that, you've not seen any order cancellations, but there have been some deferrals. Have there been any more deferrals since the last time we spoke, which was around a month ago?
No, not any more than usual. It seems to be at the same level. We also see some indications of demand picking up, which may probably reflect in H2.
Okay. Give us a sense on, the growth drivers for this year. For instance, we're seeing so much of this chatter around AI, right? Another mid-cap IT company's peer set, LTIMindtree, for instance, has announced some new innovations that they're doing on the generative AI side. Is this an area you're looking at all? And if not AI, what do you think is going to be the force to reckon with respect to your business this year?
For us also, I think AI is an area of interest, and we are investing in it proactively. We have spoken to clients. We have a couple of pilots underway. So we want to use this to be able to be more relevant to our customers. And we are somewhere in between stage 1 and stage 2. Stage 1 is where we are trying to understand what it is about, what it can do. And stage 2 is to do some pilots for clients and show them what is possible. So that's where we are currently. But you are right, I agree that it's going to be some kind of game changer for the industry in the medium term.
But is it going to be margin deflationary, Srinivasan? That's also what I think everyone's trying to understand, because there's higher productivity, increased efficiencies, but the moment you get into the AI zone, can it have a downward push on margins?
I think it's too early to say. Definitely productivity. If all the hype that is around AI plays out, then definitely there will be significant productivity gains, which could have an impact on margins. But on the flip side, I think it's on us to ensure that we are able to reskill our teams and get a lot more of market share than we otherwise would have been able. So I think it's up to us to how we use it and how we remain relevant to customers.
Okay, that is on the AI space. Speaking of margins, could you just take us through what you're expecting for all of FY24? In Q4, you saw around 25%. Should we expect similar levels in FY24 as well?
Yes, you should. In terms of margin, there are no significant headwinds. Attrition continues to be down. We have fairly good control on bench. So something in that range should be reasonably possible to achieve.
You were also, looking at bringing down the headcount, right? Earlier, anticipating that slowdown. Has that process stopped?
It is going on. I think we are at maybe about the most efficient that we could be. So I think from here on, we don't see any significant headcount reduction.
Okay. All right, Srinivasan, we will leave it on that note for today. Thank you very much for joining in. Good chatting with you. And we hope to look out for some of the other business trends. The cautious tone is quite apparent, right? Yeah. He's gone on record to say that the first quarter could be as soft as we have seen in the fourth quarter, and there could be a quarter-on-quarter decline in the business. So I think it's not settled quite just as yet.
Yeah, looks like that. And he did say that Q2 also, we might see that softness persist into Q2, but hopefully things will pick up H2 onwards. So that is the management of E-Clerx. Today it is, holding up quite well. The stock has moved up in the past few minutes as well, around 1.5% in the green. But like Surabhi was pointing out, the past month is actually where we've seen a bulk of the gains come through for E-Clerx, and the stock has been up around 26% in that time. But for the markets, let's also take a look at where things are now. We're 18 points in the red now for the Nifty, 18,838. The Nifty bank holding on with around a 40-point gain, and the mid-caps have slipped further. So it's an over 120-point kind of decline on the mid-cap index. Vishal Malkan joins us now. Vishal, yet another day where we've sort of evaded that all-time high level. I think we got to like 2 points away from that, but it's not happened. And, now we're back at around 18,840. Tell us, where do you see things moving from here? And what is the call that you would take on the index level, if at all?
Hi, good morning. I think Nifty and Bank Nifty, what we can see right now are typically what in technical language, what we call time correction. So they're just consolidating at the same level since the last 10-15 days, which is also good because usually we have a price correction where we retrace back, but it's a time correction and we are waiting for a fresh breakout. So it's just a matter of time. But if we look at stock specific, then there are better opportunities where we can have good returns. So I will go more sector and stock specific right now rather than looking at Nifty crossing that 50-point plus or minus.
All right, then let's get some of your stock specific calls and, maybe we could find the opportunity there as well.
Yes, the first stock which I would go with today is a fresh breakout on Balrampur Chini, which is breaking out about that level of 405, 407 with volumes and with momentum indicators in favor. So I'll go with a buy on that with a stop of 407 for targets of 425, 430. And the second one would be Jubilant Foods, which again is breaking out up that level of 500 and staying above that with high volumes on hourly as well as daily charts. So I'll go with a buy on that with 497 stop loss for a target of 525 and 540.
Okay, got that. Vishal, thanks a lot for getting us that quick check and some of these individual ideas as well. We're going to take a short break on the show, but when we come back, we're going to discuss the way forward for the market, where things could really be headed from here. Meenakshi Davar from Nippon India Mutual Fund will be with us.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also.
Welcome back. It is not looking so good now. 140 points gone on the mid-cap index. The small-cap index also absolutely flat, so it's given up all of the morning gains right now. The Nifty, like you can see from the highs of the day, is now down almost 60 points, 55 points to be precise. And the advanced decline has also turned negative. You have around 1370 stocks in the green, for 1460 which are in the red right now. So there's definitely been quite a pullback from the highs of the day. But let's invite our guest on the show now. We have Meenakshi Davar, who's fund manager at Nippon India Mutual Fund, joining us. Meenakshi, thanks a lot for joining us, and I don't believe that we've spoken before, so welcome to the show and thank you for being with us. You know, we have been talking about these all-time high kinds of levels, which seems like the market has just been evading that. Do you think we're set for a longer time-wise correction, and that we should perhaps expect to be ranged at these levels for a while before we can see a decisive move higher?
See, market is very difficult to predict in a short term, but like we have seen, last 2 months have been quite good for the market, and a lot of stocks which have reversed in last 1.5-2 months. But there is a lot of good things that have also happened, right? So if you look at the big worry for the market, which was the inflation, that has been coming down, and considering a lot of commodity prices, etc., have also corrected. So the yield pressure that was there in the market some time ago, that has definitely eased off. If you look at, on a medium term to long term, it is what we should worry about is the earning growth trajectory of the market. And if you look at the earning predictions going forward, a market can comfortably deliver that 15-16% earning growth rate. So a lot of sectors have been doing reasonably well, and there is a lot of confidence that this earning growth will be met. So any investor, who want to play this market for next 1 year to 2 years perspective, there is reasonable confidence on this earning growth. So I think we should just look away from this near-term volatility, which is going to be there, considering how globally the macro is evolving, how globally things have been little volatile. But in terms of earning confidence in the Indian market, we are quite confident of market giving that 15-16% earning growth rate for next 2 to 3 years.
Okay, Meenakshi, we have been seeing this mid-cap rally really pick up, more interest in the broader market. I mean, we've seen it in the mutual fund flows as well, right? Where mid and small caps are getting money and large caps are perhaps losing, and seeing some flows move out. Take us through what you expect in terms of just the broader market action. Do you think this is something that will persist as well, where a bunch of the action comes in from the smaller stocks?
See, if you just look at how things have evolved post-COVID, definitely the structure of the market has changed. In terms of earning growth delivery, the market has definitely become broad-based. So a lot of sectors which were not earlier participating in this growth rate have come back, and they are decisively giving us confidence that the earning growth rate or the trend of business is looking upwards from here. So if you look at a lot of these sectors which are from these mid caps and small cap space, which are, a lot of these capex related sectors, which can be a housing capex or industrial capex, a lot of these specific consumer discretionary companies, which can be hotels, hospitals, QSR companies, etc. So they have definitely come back. So if you look at the participation of growth rate in the broader market, a lot of sectors which were not earlier participating in the growth rate have definitely contributed to the growth rate. And going forward also, there is reasonable amount of confidence that this growth rate will continue. So so market rally has been quite broad based. More so, what I'm trying to highlight is that is because the earning participation or the growth participation from these sectors have also been quite good. So as long as this trend continues, which we are quite confident on, we don't think the market will become very narrow from here.
Got that. Meenakshi, hi, Surabhi here. So if we look at the key holdings of the Nippon India Value Fund, I see a lot of financial names on it. There's ICICI Bank, HDFC Bank, SBI, HDFC, Axis, I mean the entire universe, so to speak. So tell us, what's the thought process from here on? Because, if we look at the last year, then it was a year of banks, last 12 months. They outperformed the Nifty. But if we look at this year, the calendar year, then the bank Nifty has been sort of not doing too much. So what's the sense that you get from here on? Because of the fact that perhaps, we're expecting lower margins, could that pressure banking stocks? Or do you think the focus will remain on credit growth and therefore we might see a bigger rally perhaps in the second half?
So a lot of points that you mentioned. See, last year was a very good year for banking sector because everything was going right for them. So if you look at credit growth, that was trending above the trend line. There was no asset quality risk. And in terms of margin, the margin resilience was quite good. Now, if you have to predict, so these are the three most important variables which will decide the performance of the banking sector going forward as well. So if you look at things going forward from here on, the confidence on the credit growth remains quite good. So we will see that a lot of these companies will show you that 17-18% credit growth. In terms of credit quality, the credit quality is behaving very, very well in this cycle. And going forward also, because if you see the leverage in the balance sheet, may it be corporate balance sheet or the retail balance sheet, they are all in the good shape. So we do not say that asset quality will deteriorate much from here. The only third variables which is of concern for the market is the performance of this margin. So if you look at margins, there are three variables that can impact the margins from here. First is that interest rates going down from here on, which is the view that will have some amount of negative impact on the margins of these franchisees. The other more important variable, according to me, is also the competition intensifying. So if you look at, because the availability of capital is good, liquidity environment is good, a lot of the big banks and NBFCs are now chasing same consumer or the same corporates, and therefore the competition is very, very high. So your ability to make disproportionate margins from here on is quite low. But we believe that this story is quite strong and any investor can expect reasonable amount of compounding of their returns from here on because entry point of valuations is not very high.
Okay, got that. Meenakshi, financials we've spoken about. Are there any other pockets of the market right now which you think, even at these levels, are, if someone is to put fresh money to play, are there any pockets which look particularly exciting to you right now?
So, yeah, we remain quite positive on this whole capex cycle. So, India had struggled for this capex cycle for a reasonably long period of time. It is only in last 1.5 to 2 years that we have seen this capex cycle has come back. And we believe that there is long runway for growth for this capex cycle to continue. So now, if you look at there are multiple things to this capex cycle. So we are quite confident on industrials. We are quite confident on cap goods. We are quite confident on housing capex companies also. So these can be a lot of these allied companies, which can be building materials, cements, wires, etc. So this whole basket looks quite promising to us. And in terms of consumer, we do believe that consumer is not very broad-based. Consumer cycle is not very broad-based. Still, the mass segment of consumer is not recovering, and the recovery is maybe some time away. But if you look at certain pockets, which can be, premium pockets or sectors which are evolving sectors in the country, which can be QSR companies, hospitals, retail, diagnostics, all these sectors we are quite constructive and positive on.
Okay, those are some spaces that you like. Meenakshi, it was great to have you on this show, and we do speak to, have you back very soon so we can discuss your bets a little bit in more detail. But with that, we're going to get into a short break. When we come back, Lupin is the stock that we're looking at today. It is lower in trade after the big 6% kind of move that we saw yesterday. We're going to get you the street view and exclusive commentary from the management following the US FDA's nod for Spiriva generic. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last.
Welcome back. You are with us on Trading Hour, and let's focus on Lupin now. This is a company that has emerged as the first generic player to get the US FDA's approval to sell the billion-dollar respiratory drug Spiriva generic in the US. The approval has come through earlier than expected, and the key positive is that this is a limited competition drug for the company for the next 3 years. To understand the opportunity and how much it could contribute to Lupin's sales, Ekta caught up with Nilesh Gupta, MD of Lupin. Take a look.
This is, I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. And obviously we're the only generic at this point of time, so it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI, now there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow out of this one. Thankfully we've toughed out. We've been saying that, okay, this is the bottom, this is the bottom, this is the bottom, and the bottom kept going lower and lower. I think we saw that in Q4. We're seeing that in Q1 as well. We're back to that 170, $180 million kind of number, and that number is a solid foundation to build on with products like this.
Okay. $850 million in terms of US generic sales by FY25.
Yeah, I think that's a pretty fair number. That's a pretty fair number. We should be able to do that and maybe some more.
Is US pricing pressure is the worst behind us, because Lupin at one point even exited some drugs?
Yeah, we exited quite a few products, and we were not the only ones. There's a whole bunch of people who exited a bunch of products, primarily around the oral solids. I think the supply continuity seems to be more of a conversation. I think pricing will always be only downwards. So there's all, I think we guide for high single-digit kind of pricing erosion that will remain.
And margins, you have improved in terms of margins. I think it was a 6-7 quarter high. How much more do you think you can do in terms of margins now? Exit run rate was 18% is what you guided for.
Yeah, we would still hope for that. I think certainly we want to get back to that. We're pitifully low. So there's a lot of room to improve. We're actually bottom of the pack, and we're not used to being underperformers. So there's a lot of room for us to grow. I think we already saw that from Q4. You will continue to see this improvement every quarter, and the exit remains, north of 18%.
Okay, Nilesh, quick last question. What is the larger picture for Lupin? Because you have seen some rough times in terms of the US pricing, compliance issues, but now with this approval, with Suprep in your portfolio, albuterol, all of these key, larger, complex generic drugs, where do you see the larger picture for Lupin if you're talking, say, 1 to 2 years down the line?
Sure. I think the larger picture is clearly the pivot to complex generics, doubling down on India and starting innovation again. And I think that has to be, because all of this is sticky compared to just regular generics in that sense. So I think the pivot from oral solids to complex generics with products like this is happening, but there's a lot more to be done. Injectables, we've not even started. I think you've seen a lot of approvals on injectables, clearly more to be done there. India, obviously we're doubling down. We added 1,000 people. We're going to keep adding and we're going to keep growing in India, and then definitely restart innovation at some point.
All right, Lupin's Managing Director Nilesh Gupta telling us that they could do sales of around 200 million. Also saying that overall US generic sales of $850 million sounds quite fair, and saying that they will push harder on the margins as well. They do hope to get past that 18% level that they have spoken about. But speaking of Lupin, we also did speak to Ramesh Swaminathan, who's Executive Director, Global Chief Financial Officer and Head Corporate Affairs at the company. So listen into what he had to say on Spiriva generic as well.
We are confident about the immediate future in America, and obviously this has a pretty big impact when it comes to the overall performance of Lupin itself. We have guided for a run rate of over 18% by the end of this fiscal. So our aspiration at the very least would be to get to that and perhaps higher as we go by. Insofar as the OSD is concerned, there is going to be price erosion, or at least not perhaps to the same extent as in the past, but it is certainly going to be price erosion.
Okay, so that's the word from the Lupin management. We also caught up with Nithya Balakrishnan of Sanford Bernstein to figure out how they're pricing in the opportunity and their call on the stock. Take a look.
So we do believe that it's a substantial opportunity as well. When we look at the addressable market, we think it's about somewhere in the zip code of $500 to $600 million. Of course, the reported numbers are much higher, but that's at a gross level. But we think at a net level, it's about $500 to $600 million. Lupin, given that it's the only generic, if we were to expect around a 35% price discount, and if they're able to achieve a 35% market share, you are talking about this being an annualized $140 million kind of opportunity.
Okay, that is the complete view on Lupin right now. But with that, we have to get into a short break. There's lots more news and updates that we're tracking in just a bit. We'll also talk about the market, 25 points lower there. Stay with us.
Incredible. I mean, obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year, over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our
Welcome back. You're still tuned into Trading Hour. While on the Nifty, it's been pretty steady with that 20-point kind of dip over the past hour. Take a look at the Midcap index, because that is now down 220 points on the Midcap index, so 0.6% lower over there. The banks are holding up. It's around 60 points higher there, but the slide in the broader markets is really showing up. We do have to wind down on the show, but before that, let me tell you what's lined up on our very special offering, Who Moved the Market today. Surbhi, take us to what's on your radar. I hear you're talking about the media space.
Well, the weekend's coming up, so we're looking for the perfect pot boiler. And when it comes to the market, what better than Z, right? There's so many moving parts to this story. It's hard to almost, keep up pace. So today we'll get chatting with Karan Taurani. Karan's been keeping a very positive view on the stock, despite all the turbulence and, all that's happening in the court, SEBI, SAT, NCLT. He's still optimistic, so we want to sort of get right down to the center of it. What all is at stake, and if someone is looking at Z at these prices, it's had a phenomenal journey. I mean, Z has lost 80% from the time that deal was announced back in December of 2021. It's not for the faint-hearted, it is for the brave hearts. But if you're looking at this, if anyone's looking to get in now, what are the concerns, what are the things you should keep in mind? So it promises to be an interesting one. I think, dance, drama, emotion, uncertainty, all of it packed in when it comes to the Z story.
Okay, so we are definitely going to tune in 2 p.m. on YouTube and Twitter. That is Who Moved the Market.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment, because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together. They have worked it out, and considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high, and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather. There is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time. And this is the last year, it means the year which passed away just now. In that year, our total production was around nearly about 834, 89. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well. As far as thermal power plants are concerned, little
The Nifty comes close to touching all-time highs, then pulls back. Industrials and auto show some spark, but IT and utilities drag.
Lupin's MD Nilesh Gupta tells CNBC-TV18 that the Spiriva generic and clock sales of over $200 million, and he sees Lupin's generic business sales near $850 million by FY25. Group CFO Ramesh Swaminathan too joined us, said that margins could hover around 18% for the year despite pricing pressures.
Z Enterprises MD and CEO Puneet Goenka, in interviews to papers, says the merger with Sony can go through without him at the helm and that both parties remain committed to the deal even while taking cognizance of SEBI's order.
The TCS stock slips despite the IT services major inking an £840 million 10-year deal while the launch of an enterprise generative AI platform by LTI Mindtree fails to excite the stock. Powell's pointing to more rate hikes plays spoiler. Good afternoon. You're watching us here on Halftime Report. We're halfway through the trading session, and the halfway of the trading session itself was extremely exciting. I'm Mangalam Malu, with me Sonal Bhutra. You know, we came perilously close, almost 1 point away from the record high. We were just looking at crossing that line. It reminded me of one of those cricket games where, you know, you're looking at the replay in slow motion, looking at whether the batsman crossed that line or not. And it turned out that the batsman just stopped short of that line. And from there, we saw some bit of profit taking. But one thing that really stands out in today's trading session is the Nifty Bank outperforming. After a lot of underperformance, we see the Nifty Bank being the only major index to be in the green.
So close yet so far, right? That is exactly what has happened today. Right now, Nifty is almost at the day's low. We have 17-point cut on the Nifty. And as Mangalam pointed out, Bank Nifty is doing well. So there is some spark of positivity in the markets. Midcap index, after continuous record highs in last couple of trading sessions, has also come in for profit taking, 0.6% lower there. IT stocks are under pressure. We had Nasdaq not doing so well. And we also have Accenture's numbers later tonight in the US markets. So that is something which will be key to track as well. But as always, a lot of stocks which are on our radar today and a lot of brokerage action in news today as well. So let's start with JSW Energy, which is buzzing in trade on the back of fresh brokerage call from Antique Broking. Vivek, a double upgrade there. What is Antique saying about JSW Energy?
Well, that's right. You know, it's some positive flow for JSW Energy, given the fact that, you know, there's been a double upgrade. So, you know, it's double the conviction from Antique as far as JSW Energy is concerned. What they are saying is that the company is well on its way to commissioning almost 10 gigawatts by FY25, which is half of its stated target or half of its stated FY30 target. Also, what they're saying is that this particular development of commissioning close to 10 gigawatts by FY25 will help the company garner almost 7,500 to 8,000 crore in EBITDA. And the company, along with that, is making rapid strides as far as energy storage is concerned. both from battery, from pumped hydro storage. Company is also making rapid strides in the green hydrogen segment. Now, earlier ROE for the company was depressed given the fact that the group believed in lower capital allocation and faster debt reduction. But, Antique now believes that that can change as well. They believe that, the recent acquisition that JSW did of Mitra, is improving efficiencies on a rapid scale. And what they're saying is that the run rate EBITDA for Mitra is well on its way to reaching 1,650 crore. And these, actually make the acquisition valuations much more comfortable at this point of time. They believe, the valuations are now at 6.4 times 1 year forward EV to EBITDA. And when you're comparing it to a greenfield project, it takes almost 7 times EV to EBITDA. So it's actually been a cheaper acquisition for JSW Energy. And lastly, what they're saying is that green hydrogen as well as solar module manufacturing is going to act as a sweetener as far as the company's prospects are going forward.
All right, Vivek, thanks a lot for that. Percent higher on JSW Energy, mildly off the highs, but that's in line with the weakness that we're seeing in the Midcap index. In fact, that's another thing that we're looking at right now. The Midcap index at the low point of trade with a cut of almost 0.75%, and the market breadth firmly now in favor of decliners. After 8 sessions of hitting record highs for that index, maybe some bit of profit taking is on the cards. But the other stock which is under pressure is IDFC Bank, IDFC First Bank that is. CLSA has downgraded the stock. Abhishek is here with us to tell us more. Abhishek.
Well, as you mentioned, CLSA has downgraded the rating on IDFC First Bank to underperformance from buy. However, they have increased the target price to about rupees 85 per share from the earlier target price of rupees 80 per share. Now, IDFC Bank, has been one of the best performing stock. That is what CLSA says, given the fact that YTD it's outperformed Bank Nifty by about 35% in last 6 months. So, while they like the bank's compelling loan growth story, however, they think that the valuation of 1.8 times price to book value on a 1 year forward basis does not fully reflect the unfinished journey on the ROE improvement. So they believe that the ROE can touch 14% by FY26 versus the 11% that the bank has seen in Q4 of FY23. So a mismatch between higher valuation and lower ROE has made them actually downgrade the stock to underperformance from buy. Back to you.
Okay, all right. 5.5% lower on IDFC First Bank on the back of this downgrade that has come about. But today is a lot about brokerage notes and stocks reacting to opinions coming in from sell-side analysts, and Paradeep Phosphates is one of them. The stock is higher by 7% in trade today after Antique has initiated coverage on the stock. They say it is India's second largest phosphatic fertilizer player in the private sector, and after the capacity expansion that will come by, it will increase their capacity to 1.8 million metric tons versus 1.2 million metric tons earlier. So that's a big capacity that they are looking at as well. They had acquired Zuari Agro's Goa plant, and that is something which will lead to higher market share and higher profitability for the company as well. They believe it has one of the strongest business models in the product that it actually caters to. The first one, of course, is Coromandel International, and if we look at the valuations at which this one is initiated, they say that the rating that has come by, that is a buy rating with a target price of 100 rupees per share, is on a valuation of 12 times FY25 EPS, which is at a 20% discount to Coromandel International. So reasonable valuations and growth prospects, something that the street likes as well.
The street likes it. The stock up 7% in an otherwise wobbly market for the broader markets. In fact, as we speak, the broader markets have only extended their cut. The Midcap index down almost 300 points. Take a short break, come back. When we return, we talk about a bunch of stocks. Lupin is one of them in focus. We get you the street view and exclusive commentary coming in from the management following the US FDA's nod for Spiriva generic. Stay tuned.
incredible. I mean, obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacities.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, just a while back, we were talking about how Bank Nifty was outperforming at least, but there's been a sudden fall from the top there as well. There you go, at the day's low, 8 points lower on the Bank Nifty, and a similar trend is seen in Nifty and Midcap side of things as well. So the selling pressure has intensified. Nifty is now down 40 points, and a couple of stocks which are leading to that. Reliance Industries, that should come for you on the screen. That stock is at the day's low, a heavyweight which is putting some pressure on the Nifty as we speak. And on the Bank Nifty side, we do have State Bank of India, that too is at the day's low. And these are two stocks which are leading to the fall that we are seeing, the sharp fall in just last couple of seconds itself. So we'll keep tracking that for you. But one trend that we have noticed in June is definitely block deals. Deals worth nearly $2 billion were done so far this month. Vivek Iyer is joining us with more details on this one. Vivek, we just can't keep count anymore.
Well, you're absolutely right. It's raining blocks as far as Dalal Street is concerned. And like you mentioned, the total value of all of the block deals has gone ahead and crossed almost $2 billion. In fact, today too, you saw very large block deals happen. Yesterday, you saw Shriram Financial over 4,800 crore. So, both Piramal as well as TPG Capital has exited. Today, Sansera, 14% of equity changed hands. Delivery, a clean out trade from a PE investor. Carlyle exiting completely. So, in the last couple of days itself, so much of activity. But, just going back, in the last week or so as well, look at HDFC AMC, a 10% stake worth over 4,000 crore, absorbed quite easily. Timken India, the parent, selling a significant chunk, over 1,900 crore in that particular name. Look at Kim's Hospital as well, the PE investor sold stake over 680 crore. Kalyan Jewellers, you saw the stock rally quite a bit after the large block that happened. The PE sold stake worth almost 700 crore. Kotak Mahindra Bank, the CPPIB stake that was pending for quite some time, worth of that particular block deal was almost 5,800 crore. CMS Info, PE investor selling stake over 700 crore. Go Fashion over almost over 740 crore of block deal happening over there. MTAR Tech as well as CDSL. In CDSL, BSE sold almost 5% stake out of its total 20%. All of this was absorbed quite easily, and a lot of PE funds are getting exits, while the blocks are happening and while markets are within kissing distance of the lifetime high.
Take that point, Vivek. Thanks a lot for that. It is raining block deals. The only place it's not raining is perhaps in Mumbai right now and a large part of India where the monsoon has been delayed. But let's see, how these investors and how these investments and exits by PEs and some promoters also pan out going forward for the buyers. But let's talk about some of the stocks which are being making news, and one which was in focus all of yesterday and today as well, which is Lupin, as it's emerged as the first generic player to get the US FDA's nod to sell the billion-dollar respiratory drug Spiriva generic in the US itself. This approval has come through earlier than expected, and the key positive is that this is a limited competition drug for the next 3 years. To understand the opportunity and how much it could contribute to Lupin's sales, Ekta caught up with Nilesh Gupta, who is the MD of Lupin. Listen in.
This is, I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. Obviously, we're the only generic at this point of time, so it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI, now there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow out of this one. Thankfully we've toughed out. We've been saying that, okay, this is the bottom, this is the bottom, this is the bottom, and the bottom kept going lower and lower. I think we saw that in Q4. We're seeing that in Q1 as well. We're back to that 170, 180 million dollar kind of number, and that number is a solid foundation to build on with products like this.
Okay. $850 million in terms of US generic sales by FY25.
Yeah, I think that's a pretty fair number. That's a pretty fair number. We should be able to do that and maybe some more.
Is US pricing pressure is the worst behind us, because Lupin at one point even exited some drugs?
Yeah, we exited quite a few products, and we were not the only ones. There's a whole bunch of people who exited a bunch of products, primarily around the oral solids. I think the supply continuity seems to be more of a conversation. I think pricing will always be only downwards. So there's I think we guide for high single-digit kind of pricing erosion that will remain.
And margins, you have improved in terms of margins. I think it was a 6-7 quarter high. How much more do you think you can do in terms of margins now? Exit run rate was 18% is what you guided for.
Yeah, we would still hope for that. I think certainly we want to get back to that. We're pitifully low, so there's a lot of room to improve. We're actually bottom of the pack, and we're not used to being underperformers, so there's a lot of room for us to grow. I think we already saw that from Q4. You'll continue to see this improvement every quarter, and the exit remains north of 18%.
Okay, Nilesh, quick last question. What is the larger picture for Lupin? Because you have seen some rough times in terms of the US pricing, compliance issues, but now with this approval, with Suprep in your portfolio, albuterol, all of these key, larger complex generic drugs, where do you see the larger picture for Lupin if you're talking, say, 1 to 2 years down the line?
Sure. I think the larger picture is clearly the pivot to complex generics, doubling down on India and starting innovation again. And I think that has to be, because all of this is sticky compared to just regular generics in that sense. So I think the pivot from oral solids to complex generics with products like this is happening, but there's a lot more to be done. Injectables, we've not even started. I think you've seen a lot of approvals on injectables, clearly more to be done there. India, obviously we're doubling down. We added 1,000 people. We're going to keep adding and we're going to keep growing in India, and then definitely restart innovation at some point.
Okay, that is the word coming in from Lupin's managing director. The stock, though, has come in for some profit taking after that stellar run that we saw yesterday. Time for a break now. Jay Thakkar of Sharekhan will join in with some trading strategies on the other side. Stay tuned for that.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this
Welcome back. You're watching us here on Halftime Report. The market's virtually at the low point of trade. In fact, the Nifty hit very close to that 18,800 mark after recovering about 10 points. From there, the Midcap index continues to sulk, down about 300 odd points. So good time to get in a perspective on the FNO end of things, and mainly because it's also the weekly options expiry day. Let's see where it goes. But, you know, one thing has been clear. The congestion that we've seen between 18,850 to 18,900 are levels closer to the record high. In fact, so many times over the last 4 occasions, we've seen the Nifty come very close to record highs. On June 16th, we had the Nifty come within 25 point distance from the record high. June 19th was 7 points. Yesterday, we came within 12 points from a fresh record high, and today, just 1 point away. 18,886.6 was the high today. On the Nifty, 18,887.6 is a fresh record high. So that's telling you that, people have plugged into their algorithms that as soon as there is a record high, go ahead and lighten positions, and that's why we are facing some resistance. A large part of the resistance is coming from the Nifty bank's inability to cross the 20-day moving average as well. Today, briefly, it crossed that and it couldn't sustain above that. 43,974 is where, despite its outperformance, the Nifty bank is finding some resistance. The other factor that's not working for us is that there is no support coming in from the IT index. So the IT index, which was supporting us for the last few trading sessions, has actually begun to underperform today, and the Midcap index too is down at the low point of trade. So both those indices come up for you, not particularly supporting. So in terms of expiry, what are the trades that option writers are taking? They take the trade of resistance on the way up. So that's why we're seeing a fair amount of writing on the 18,900 call, where the premium has all but eroded, just about 5 rupees left. So, 2.7 crore shares outstanding in open interest. So that's a bit of a stiff resistance. 18,850 call also has seen a lot of writing for a premium of 15 odd rupees, telling you that levels upwards of 18,865 will continue to be a bit of a congestion zone. But were we to sustain above that, we will continue to see a lot of short covering, and maybe that will propel us beyond the record high. 18,800 put, however, is the bull's last bastion. We've seen a lot of writing out there, a premium at around 20 rupees in the 18,800 put, telling you 18,780 to 18,800 would be an important support to watch out for. Just a couple of stocks I'm looking at. Balrampur Chini, all the sugar stocks are doing well, but Balrampur Chini is approaching its F&O band limit. So if there is a lot more open interest addition here, it may enter F&O band today. And a lot of open interest addition on 2 stocks, Glenmark and Coromandel. Let's see what happens here as well.
Okay, all right. So 18,800, an important level to watch out for in the immediate scenario. But let's tie it with some technicals as well. Jay Thakur of Sharekhan is joining us on the show now. Jay, well, as we were talking about it earlier, so close, but those levels seem to be very far. What are the charts suggesting now?
Hi, a very good afternoon to you. Well, see, as Mangalam rightly pointed out, 4 to 5 occasions we saw Nifty not able to cross those levels, and yes, we are seeing some good resistance or some profit booking around those levels. On the flip side, I would say that 18,700 to 650 is a very crucial support level for the short term. So from the expiry point of view, yes, 18,800, 750 is the support area. But short-term point of view, I think 18,600, 650 is the solid support area. I think till those levels are held, the probability of Nifty taking off its all-time highs and then inching towards 19,000, 19,100 is quite high. So these are the short-term targets on the upside which we are eyeing for until 18,600 levels on the downside are held. As far as Bank Nifty is concerned, now that's trading, I would say, opposite as that to Nifty, where Nifty is forming high tops, high bottom. Bank Nifty is forming low tops, low bottom, and 44,000 to 44,200 range out there is a very crucial resistance till those levels aren't taken off. The overall trend will be sideways to negative out there on Bank Nifty. Despite private sector banks like HDFC and ICICI bouncing back, I mean, we aren't seeing that bounce coming in Bank Nifty. But then Fin Nifty is really has provided a breakout about 19,550, 19,600 range. So we are seeing Fin Nifty and Nifty trending higher and Bank Nifty going sideways. That's the trend for the market going forward, and we are bullish on Fin Nifty as well. Stock specific ideas as far as those are concerned, I have a sell recommendation on Hindalco from the metal pack. It's trading around the levels of 420 in the spot. One can sell this for a target of 405 with a stop loss of 427. Reason being, technical rising wedge pattern with a sell crossover in its short-term status. And I've got a buy recommendation on Balakrishna Industries trading around the levels of 2470. One can buy this with stop loss of 2420, targeting 2600.
Okay, all right, Jay, thank you so much for joining us today. So those are some technical bets. So we'll do one thing, slip into a short break. And as we do that, let's get you some market opinion. Earlier today, we spoke to Harsha Upadhyay, who's the Chief Investment Officer, Equities at Kotak Mutual Fund, to get his outlook on the market and his top sectors to bet on. Listen.
I'm sure at the beginning of a bull market, you will see a lot of these liquidity-driven movements in the market. And that's what we are seeing right now. As usual, whenever the markets go up, and especially in a momentum-driven market, you will also see a lot of stocks which are not fundamentally strong also go up, and they do go up much more than some of the fundamentally strong stocks. So to that extent, in that basket, one needs to be careful. Defense is one pocket where we are also very positive from a long-term perspective. We do hold a couple of stocks in our portfolio. But from a very short-term perspective, I think most of these stocks are discounting at least the immediate upside that you can see in terms of fundamentals. What has happened is you do not have too many stocks which are into defense manufacturing at this point of time. And we have also seen a fundraise happening, and money has been raised for a thematic sector fund or a defense-related fund. If you go by the past history, whenever the deficiency of monsoon is more than 6%, that's when you start seeing impact on the agricultural production. That's when you start seeing impact on inflation, etc. So not only we need to see the quantum of rainfall, but also the distribution of the rainfall as you go ahead. So maybe in another 6 to 8 weeks, things will be clear. But as markets go up in terms of valuations, obviously this also needs to be kept in mind.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our metro, we'll be able to reduce 10, or we'll be able to save 10 lives.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, for the markets, we are seeing the fall continue. The Nifty is down around 35 points, and we do have the Bank Nifty as well, which is continuing to be lower in trade today. So let's talk about some stock-specific news as well. Forgings is on our radar. This is a special segment, Inside Edge. The stock is up over 4% in a market which has been very volatile. So Mangalam Malu, throw some light on Forgings. What did the company say in the conversation you had earlier today with them?
Well, I wish I had the targets that this had the targets of that But the conversation that we had with him, as always, is usually very insightful. But this time around, he gave us a peek into what the future would look like. And the future definitely for them is EVs. So currently they do revenues of closer to 1,500 odd crores. But they believe that by 2030, the EV vertical alone, which is accounting for nothing, practically nothing in their revenue so far, would be 2,000 crores by 2030. And the overall business, which could be around 2,000 crores in FY24, could touch almost 7,000 crores by 2030 itself. What do they have to invest for this? Around 500 to 750 crores over the next 5 years. Where will they fund it from? From internal accruals itself. The biggest question, what does EV revenue of 2,000 crore look like in terms of their operational performance? They said, there is a fair amount of competition out there. The margins, once they settle around the industry standards, they themselves will be doing the industry standards itself. So no real worries on profitability. And as always, the management guided for profitability over growth, or growth with profitability itself, because they are not the kinds who chase growth at the cost of profitability. They also reiterated their FY24 guidance, which is over 90,000 tons in terms of volumes, which would equate to around 1,800 to 2,000 crore sales. They're targeting 2,500 crore sales over the next couple of years. Margins could improve. EBITDA per ton seen around that 35,000 rupees, and that would mean EBITDA margins of roughly 19% itself. So that's causing the stock to move higher today. Let's hear it out from that itself as we wrap up with this Let's go across to the Vice Chairman and Managing Director of Forgings, Vidya Shankar Krishnan.
Overall, we see this to be a 2,000 crore enterprise by 2030 or even higher. Whatever the industry settles down in terms of margins, that will be the margins that Abhinava will also have to work with in terms of overall performance. So that's not a matter of concern. So we've kind of taken in a wide range of margins, which at this point of time, I'm not at this thing to disclose, but wherever the industry settles at, we'll be there.
4.5% higher on Forgings. With that, we'll slip into a short break. But before we do that, let's tell you what's lined up today on our special offering on YouTube, Who Moved the Market. Surbhi, tell us what's on your radar.
Well, on the radar is a story that has emotion, action, legal drama, passion, all of that thrown in. I'm talking about the Z saga. If you just go back to when the deal was announced, we're talking December 2021. This stock was around 330, 340 rupees back then. Today it's at 180. 80% fall from the time the deal was announced. The critical question is that for those who are brave hearts, is this a great buying opportunity or is this a strict avoid? We put that question to the analysts at Elara. Also talk about the broader media landscape and what lies ahead in this big saga between Z and Sony. Will it or won't it? Will the merger happen or not? More coming up on Who Moved the Market, our digital show. We are live on YouTube and on Twitter, so make sure you do tune in. Back to you guys.
All right. Thank you so much. We definitely will tune in at 2 p.m. to get the entire saga of Z Sony. But until then, just take a short break, come back, and on the other side, we tune into our conversation with Nilesh Gupta, the director of Vijay Sales, to talk about the demand picture for consumer durables, most importantly, the impact of unseasonal rains and the weather changes on their sales for this summer. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year,
Welcome back. You're still tuned into Halftime Report. Well, industry sources indicate that consumer durable companies have witnessed decline in sales in Q1 anywhere between 25 to 30%, specifically in the months of April and May. And June has witnessed a 15 to 20% growth. This is on a low base and delayed monsoons. To discuss this and more, we are joined by Nilesh Gupta, who is the director at Vijay Sales. He is joining us to discuss the demand trends, what's happening in the industry, and is this decline a big problem and expected to continue as well? Mr. Gupta, good afternoon. Thank you so much for joining us. Well, as I pointed out earlier, industry sources are indicating that sales have declined, in fact, in April and May, but some recovery is seen in June. Your take, what is leading to this cut in sales, and is this a trend that you expect to continue into Q2 as well?
So, good afternoon, everybody. I think there has been a little misunderstanding. There has been a sale drop, but that is only related to the summer products, basically air conditioners and coolers, and a little bit on refrigerators, primarily because of the unseasonal rainfall which we saw throughout the country during April and May. But otherwise, all the other categories are going well. So there is no worry on the consumer front. It's not that we should be worried that the consumer psyche is not to buy or delay their purchases. It was only a seasonal thing. But the biggest silver lining is, since monsoon got delayed, we haven't seen monsoon even now in the West. And so we have seen a real uptake in the air conditioners also this month, and which also indicates that the consumer spending is not a problem. And I don't see any challenge in the Q2. Most probably because of the unseasonal sale which we unseasonal rains, which we saw the dip in the sales of air conditioners and air coolers. There's also a strong possibility that now I think this is not going to be something which is one of a kind. I think the weather is going to play erratic because of all the global warming and I think all what everybody is talking about. So there's a strong possibility that during the rest of the year, what sales we were experiencing in air conditioners, we may see uptake on that side also. Because if during summer you had monsoon, there's a strong possibility during monsoon also you'll have periods of no rains and heat going up. So I expect that we'll have over a period of time, if the weather plays strong, then we'll have sales of the air conditioners throughout the year in a much better way. As far as other categories are concerned, they are doing good. In fact, we have seen a huge growth in mobile category. We are seeing growth. We are seeing growth in laptops. We are seeing growth in television. The growth has come in. So consumer spending is there. Let's not worry too much.
All right, let's not worry too much. Consumer spending is there, so that's good. But you know, there have been so many yardsticks to compare with in recent times because of the disruptions. Last couple of years were disrupted because of COVID, and then this year itself, the first half of summer, when there was a heat wave, there was a fair amount of sales jump. Then there were unseasonal rains, and then we saw a decline in sales. And now that monsoon had been delayed, there has been an increase in sales. So could you give us a sense of, you know, comparable numbers, so to say point to point? Is there a yardstick to measure by which would tell you whether there is a problem, there is no problem? Just give us basic, simple, understandable numbers.
So I'll tell you, simply put, I think for the last 2-3 years, everybody is put on standby. Okay, we'll not let you have any measurable numbers, measurable yardstick, because as you rightly said, February we saw summer peaking in earlier, and we saw good sales compared to last year February. So I think now what is happening now, we should not see quarter one to quarter, last year quarter, this year quarter, last year this month, same month, and this year same month. I think the measurement should be only on the entire period. And that should be maybe, if not a year, annual, maybe a half-yearly period, and we'll come to know. Otherwise, the things are changing very fast. Consumer mindsets is there one thing for buying. See, one thing which the consumer durable industry has to acknowledge is post-COVID, there's a structural shift in the thought process of the consumers. Because during and this I have repeated again and again, because during the COVID, people were only at home and only help which they had was consumer durables, whether it was entertainment or whether it was doing the daily course of dishwashing, refrigerator, storage of food and everything. So one thing is very sure, post-COVID, structurally the consumer now thinks more about consumer durables, and they're always upgrading more than their capacity. Capacity in sense, not only from a finance point of view, but even if their home doesn't allow 2 refrigerators, there are places where people are making way for 1 more refrigerators. So I think consumer durable is here to grow. These are minor blips which will happen because it's a seasonal product. Air conditioner is a seasonal product. Basically, it's a product which people buy throughout the year, but during the season it peaks. During the season it peaks. So that's the way we had an issue. But I think... Yes.
Yes, that's exactly what I was going to ask you next. When you say we cannot compare the sales, say month on month or quarter on quarter, in the first half of this financial year, if you compare it to say normalized years, because as you earlier pointed out, COVID saw different consumption patterns. Last year was a different base. So if you compare it with the normalized levels, what kind of growth are you expecting industry-wide? And do you expect something like this or better numbers in the second half? Because we will have festive season as well.
So this year, definitely the second half is going to be better than the first half, because for the simple reason is this first quarter we got a lower down because of the season. So there's no doubt about it. We'll see a higher growth in the second half coming in, because at the end of the day, consumers are going to buy. Only thing is people, because the peak summer didn't happen, there were rains in between, they did not buy, but they are going to come back and buy. So second half is going to be definitely better. Right now, so what I see in this quarter, overall, if I'll see, we should see a growth of around 5 to 6% only. But next quarter, we can safely assume if everything remains okay, then at least 10 to 15% growth should be visible.
All right. And finally, for the first half of this calendar year so far, if you could give us a sense of growth that you've seen, growth or compression that you've seen across categories. You mainly operate in TVs, refrigerators, air conditioners, washing machines, and I presume you would have some other laptops and electronics. So if you could give us a sense of how all these categories have performed in the first half of this year, what do you expect in the second half of this year?
So basically, if you see in the first half of this year, or in the first half of this year, if you see, what we have seen is televisions had done well. On the quantity base, it has not grown so high, maybe 3 to 4%, but value terms, it has gone up by around 8 to 10%. Refrigerators has been on a, I would say, a little negative, because again, it's seasonal product, so it got affected. So we are seeing a refrigerator negative of around 3 to 5% in the first half. Washing machine has been more or less no growth scenario. And then the growth factors which have come in the digital part, where in mobile we have seen a growth of nearly 15 to 20% value-wise. And so have we seen a growth in laptops around 8 to 10% quantity-wise. So overall, if you see the value of the business, we are seeing a 10 to 12% growth as of now, and which we expect in the second half to value-wise, we should be growing at least 15 to 20%.
You didn't say, Mr. Gupta. You didn't say ACs.
So ACs, yeah, ACs we have seen a degrowth of around 10%. Overall, if you'll say, it will be a degrowth of 10% in this summer season.
Okay. All right, that was very helpful, Mr. Gupta. Thank you so much for joining us and clarifying that the slowdown that's been seen is only in the AC or the refrigeration category. Other than that, the categories are doing well. And thanks a lot for giving us industry trends as well. We'll do one thing, slip into a short break. And when we come back, we'll get you more on markets and stock-specific action. Stay tuned.
Incredible. I mean, obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7. And in this year, over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 160,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce one day of time in completion of our metro, we'll be able to reduce 10 or we'll be able to save 10 lives.
Welcome back. The weakness for our markets continue. The Nifty still holding above that 18,800 mark. So that's the last bastion of support that comes in for bulls. There is weakness in the global markets, however. Is it because of Jerome Powell's comments, or is it because of, any sort of profit taking that we've seen after a big rally in the global markets itself is something that we'll be watching out for. Lastly, because the global markets are pointing towards extended weakness, the Nikkei currently is at the low point of trade. A large part of the Asian indices are currently not trading, so we'll monitor that. Apart from that, we're seeing some weakness in terms of what the futures for the European markets are pointing at as well in terms of opening. We have FTSE, DAX as well as the CAC French index, all of them pointing towards a near 0.8 to 0.9% cut at the open itself. The Dow futures, however, still down by about 0.3 odd percent. The last bit of a decline on the Nifty can be attributed to Reliance. That big heavyweight currently has also moved to the low point of trade, with the Midcap index now extending its cut. Currently, it's sitting with a cut closer to 400 points as against 200 points when we started the show. So just keep an eye out on all these things, and also do not lose focus on the big Q coming in from the US itself. In his testimony before the US Congress, Fed Chair Jerome Powell reiterated that the central bank's tightening measures are yet to take full effect and hinted at more rate hikes by the end of the year. Hear him out.
Yes, I would say this economy is very strong, and what's driving it now is just a very strong labor market. There's still significant demand for workers. There are more job openings than there are unemployed people. Wages are moving up, and that's really what's driving the economy forward. People's disposable incomes are coming up. Inflation is moving down gradually. The thing that troubles people, and I think the thing that accounts for the surveys you see where despite a historically strong labor market, people are still concerned about the economy, it's really inflation. So this is our job, is to bring inflation down. The way we do it is by raising interest rates. And while that can be painful, what it does is it gradually slows down demand so that supply and demand can get back into alignment, and so that we can have inflation running at 2% and people can get on with their lives and basically not have to think about inflation. The level to which we raise rates is actually a separate question of the speed with which we move. Earlier in the process, speed was very important. It's not very important now. We were at 75 basis points for several meetings, then we were at 50 basis points, then 50 basis points, 25 basis points at 3 consecutive meetings, and now we're moderating that pace. So we only have one interest rate to raise or lower. It's not true, but mainly one main interest rate to raise or lower, and it applies to everyone. But I would say that inflation hits LMI communities and people generally at the lower end of the income spectrum much harder than people in the middle or at the high end, because high inflation can get you into trouble right away if you're living on a fixed income just to cover the basic necessities. So it is for the benefit of those people that we must get inflation under control. It's for the benefit of all Americans, but particularly for those people. And we keep that in mind as we are strongly committed to getting inflation back down to 2% over time.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, it means the year which passed away just now. In that year, our total production was around nearly about 834, 89. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well.
The Nifty comes close to touching all-time highs, then pulls back. Industrials as well as autos show some spark today, but IT and utilities drag.
Lupin's MD Nilesh Gupta tells CNBC-TV18 that Spiriva generic can clock sales of over $200 million, and he sees Lupin's generic sales near $850 million in FY25. Group CFO Ramesh Swaminathan adds that margins could hover near 18% for the year despite pricing pressures.
Zee Enterprises MD and CEO Puneet Goenka in interviews to paper says that the merger with Sony can go through without him at the helm, and that both the parties remain committed to the deal, even while taking cognizance of SEBI's order.
The TCS stock slips despite the IT services major inking an $840 million $10-year deal, while the launch of an enterprise generative AI platform by LTI Mindtree fails to excite the stock. Powell's pointing to more rate hikes plays spoiler.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, after Nifty 50 has really shown that okay, we can reach all-time highs and then suddenly pull back. So it has been an eventful day, teasing the market participants in some way, Nifty 50, but at the moment it looks comfortably in the red. And of course some negative sentiment has creeped in also because of the macros and central bank action that is expected worldwide as well. So 0.35% down on Nifty 50, and it's trending lower, lowest point of the trading session actually at 18,789. So long gone is that 18,800 level now for good. Bank Nifty, take a look at that. That is outperforming the index, but still deep in the red with 0.25% loss. And Midcap index, which remember saw a lot of buying and exuberance over the last few sessions, today is underperforming the market by a huge volume and by large, with 1.22% down at the moment, with almost 450 points cut on Midcap index. So therefore advanced decline ratio is heavily in favor of the declines because of the Midcap mid-cap space being an underperformer today by a huge margin. On my screen at the moment, despite having some weakness in the market, some of the counters like Divi's Labs, Hero MotoCorp and HDFC Group companies along with financial ICICI Bank are some of the ones which are holding strong, giving some might to Nifty 50. Pavitra.
Yeah, I mean, I guess there are just a handful of stocks, right, which are holding in the green right now. Today, it's pretty much like deja vu for the past 4 days, right? We come to this point where you go to those all-time high levels and then pull back. The difference is that today the mid-cap index is severely under pressure, so the advanced decline is looking extremely weak. And, you know, in terms of the IT pack, that is what we were talking about, at least through the morning, where we were seeing a lot of pressure. That seems to have recovered quite a bit. There are a few of the larger names which have moved into the green as well. These ones, of course, you know, are seeing some cuts, but they're significantly off the day's lows. Do keep this pack on your radar. Apart from that, it is quite a down day, but if you really want to look for green, check out the sugar stocks because they're holding up very well today and solid gains coming through on all of them. These are a few of the names. You'll see more, the likes of Ugar, Mavana Sugars, all of these seeing a very good move higher for the second day in a row. But with that, let's move on and talk about the important stories that we're tracking today. Zee Entertainment is in focus following MD and CEO Puneet Goenka's comments to papers that the merger with Sony can go through without him at the helm as well. So Surbhi is joining us with all of the details on this one. Surbhi.
That's right. So Puneet Goenka in an interview to Mint has said that the merger is of utmost importance to him and the merger should go through irrespective of whether he is or not he's not the CEO of the company. He also said the merger will benefit 96% of the shareholders and therefore it is in the larger interest of the ecosystem for the merger to go through. Now that statement coupled with the Sony statement that came in yesterday that they are committed to the merger and are keeping an eye on the developments from the SEBI order, all of these are some positive triggers for the merger and that is why you were seeing Zee reacting positively to this news.
All right, Surbhi, thanks so much for giving us all the latest information on Zee and Sony merger and the comments coming in from Puneet Goenka. Take a look at that particular stock. It was holding up in the green after those comments of confirmation of the deal still going ahead, still being on the anvil, despite the SEBI aspects and the troubles that the promoters are facing. But right now, the overall weakness in the market has engulfed this particular stock as well. But some consolation for the stakeholders of Zee Entertainment coming in with some, consolation coming in from the promoter's side. Now, we'll discuss more on all of this in our special offering on YouTube, Who Moved the Market Today? So deep dive into all the aspects of Zee-Sony merger and all the factors affecting it. Do tune into it. All right, let's focus on another stock of the day and the company which has made news since yesterday, Lupin. And the company has emerged as the first generic player to get the US FDA's nod to sell the billion-dollar respiratory drug which is Spiriva, generic in the US. And this approval, remember, has come through earlier than expected. And the key positive is that this is a limited competition drug for the next 3 years. To understand this opportunity for the company and how much it could really contribute to Lupin sales, well, our in-house pharma expert Ekta Batra caught up with Nilesh Gupta, who's the MD of Lupin, to really understand the prospects. Listen in.
This is, I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. And obviously we're the only generic at this point of time. So it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI, now there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow.
All right, that is Nilesh Gupta talking about the big Spiriva generic opportunity, saying that they could clock sales of $200 million. In fact, on this, we also spoke to Ramesh Swaminathan, Executive Director, Global Chief Financial Officer and Head Corporate Affairs at Lupin. So listen in to what he had to say as well.
We are confident about the immediate future in America. And obviously, this has a pretty big impact when it comes to the overall performance of Lupin itself. We have guided for a run rate of over 18% by the end of this fiscal. So our aspiration at the very least would be to get to that and perhaps higher as we go by. And so far as the OSD is concerned, there is going to be price erosion, or at least not perhaps to the same extent as in the past, but it is certainly going to be price erosion.
All right, so that was all coming in from the Lupin management on the new prospects developing. Now, staying with the pharma space, well, my colleague Ekta Batra also caught up with Thomas Hecker, who's the Inspector for Certification of Substances Department of the European Drug Regulator, and started by asking him on the changes in the Indian company's plant compliance standards before and after the COVID pandemic. Listen in.
All the regulators were quite curious to see whether or not the compliance level of companies had changed over the lockdown period, the pandemic, and also the travel restrictions. But I've performed about 8 inspections now, post-pandemic, and the observations we have made were more or less the same as we have seen pre-pandemic.
What are the key issues, according to you, that plague Indian facilities?
Well, I just said it in the conference. Over the course of the last 15 years, ever since I'm doing inspections here in India, facilities, equipment, buildings got better in terms of compliance with GMP, but now we were focusing on the quality management system of the companies, a robust, strong management system that really ensures the quality of medicines. And this is where we were focusing on.
So there has been no shortage of drugs in the European Union because of any kind of compliance issues faced in India?
There are a lot of shortages of drug shortages around the world, as also just said by the director of CEDAR, US FDA, and we face in Europe the same. The reasons are quite different, and it's very difficult also to tackle them. This goes from supply chain issues, this continues with quality issues, quality defects, and also GMP non-compliances we have seen as European regulators.
What about data integrity in India? Are you seeing data integrity issues in Indian facilities? Because that used to be a problem in the past. Is it as much?
Well, I think many Indian companies have taken actions in order to address those problems which were raised or starting to be raised about 10 years ago. And I think these efforts that were undertaken paid off.
Generally, what we've seen is that the US drug regulator is much more stringent as compared to their European and English counterparts. There are much more stricter compliance and regulatory actions from the US FDA. Is there a difference in terms of the two inspections and the type of inspections that take place?
Well, this is difficult to say. The European regulators as well as the US FDA regulators, they are part of the Pharmaceutical Inspection Convention Scheme, also called PICS. So, and PICS does deploy the same GMP requirements which are applicable in the different regions. So in general, I don't think that there are any differences in the applicability.
And is there a lot of exchange of information now that takes place with the US drug regulator and the European drug regulators? And how has that changed your inspections of Indian facilities?
There is a lot of communication and exchange of information. So what we try to avoid by all means are duplication of inspections. In the past, more than 15 years ago, it was really like regulators were, one left and the other one just popped in. Now these days, we talk to each other. There is for the active ingredients, for instance, a program since more than 10 years in place where the regulators put together what they are planning to do so that either inspections can be postponed by one agency while the other one is doing it, and what the agency who is doing inspection is then recognized, or the outcome is recognized by the other regulators. So all to avoid duplication of inspections and also to channel the inspectional resources.
All right, that is the European Drug Regulators chief speaking to us about, inspections of the Indian pharma facilities and saying that some concerns still definitely do persist. Also saying that we are seeing shortages in several European markets and across the world on behalf of some of these manufacturing practices. But we do need to get into a break now. But when we come back, we're going to bring you highlights from Prime Minister Modi's second day of his visit to the US and also what's in the agenda for day 3.
Incredible. Obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on an average, more than 10 to 12 deaths per day. So we got motivated by this view also. Even if we can reduce 1 day of time in completion of our
Welcome back. You are watching Business Lunch, and markets are steady as they were, we had left it, and weakness really persists on that particular front. Now getting you the latest coming in from the Prime Minister Narendra Modi's 3-day state visit to the US, and on the second day of his visit, well, the US President Joe Biden and the First Lady Jill Biden welcomed PM Modi to the White House and even hosted him for a small private dinner. Now, he continued his meeting with the key CEOs, including Sanjay Mehrotra of Micron and H. Lawrence of General Electric. Now, my colleague Parikshit Luthra is joining in to tell us more about this visit, Prime Minister's agenda for the Day 3 visit, how it's going to be, and out of all the announcements that have come so far. Parikshit, take it away.
Yes, Prime Minister Modi will receive a ceremonial welcome at the White House South Lawns. This will have all elements of a state visit. He will have a 20-minute bilateral one-on-one meeting with President Biden in the Oval Office, and then a 50-minute delegation-level meeting in the Cabinet Room in the White House. Then both leaders will address the press in the East Room of the White House and take 2 questions each. The Prime Minister will be taking 1 question each from the US and the Indian press. The joint statement will outline outcomes on defense, including the GE-HAL co-production deal on jet engines, a defense industrial roadmap, a semiconductor collaboration for the future. There may be an outline of the Micron investment in the joint statement as well. And both sides will also highlight their cooperation for future in AI, quantum computing, 5G, 6G. After this meeting, the Prime Minister will head to the US Congress, where he will spend about 2 hours and 30 minutes. The Prime Minister will meet House Speaker Kevin McCarthy, Minority Leader Hakeem Jeffries, Chuck Schumer, the Senate Majority Leader, and Mitch McConnell, the Senate Minority Leader as well. Narendra Modi's joint address to the US Congress will last for 40 minutes, where he will outline India and US role in the world, in the Indo-Pacific, and also outline India's economic reforms and growth potential. The House Speaker will then host a reception for Prime Minister Modi. Later in the evening, he attends an official state dinner hosted for him by President Biden and First Lady Jill Biden. The who's who of American politics, industry, Hollywood, and the Indian diaspora will be present here. Tomorrow, the Prime Minister will have another packed day, which includes many business meetings, including CEOs of Google, Amazon, and Boeing as well.
All right, Parikshit, thanks a lot for taking us through all of those, events that are on the agenda for today and tomorrow. But with that, we do need to get into a short break. When we return, the Bank of England will be announcing its rate decision today. That's a key cue to track as far as the European region goes. So we're going to tell you what to expect when we come back.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement. Both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified prices, in keeping the overall interest of the public at large, We have kept it at 1534 notified price as of now. And we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the
Hey guys, welcome back. You're still tuned into Business Lunch. For the market, we're still seeing around a 40-point dip right now. But, there is a little bit of an attempt to move higher on the Nifty Bank. So just about managed to move into the green over there. That is on the Nifty Bank, just around 3 points higher there. But the Midcap index is where you're still seeing a bulk of the pain come through. It's still down over 350 points right now. So 1% gone over there. And that is why the breadth of the market looks quite negative. It's at over 1:2.5. So quite negative there for the advanced decline. That's what's happening in terms of the market action. But let me also bring you some important global market updates that we are looking at. This afternoon, the Bank of England's policy decision is due to come out, and the BOE is widely expected to raise rates by 25 basis points. However, yesterday we did get the UK inflation print that also came in hotter than expected, and that has the market rethinking its expectations. CNBC's Juma Anna is here with the details.
Going into this meeting, up until yesterday, I think the markets were pretty set on a 25 basis point hike. But yesterday's inflation print did change everything, coming in line with where we got the April month, so 8.7%. Every single forecaster, analyst out there was expecting it to drop. But no, we didn't see that. Perhaps more worryingly for the Bank of England, core inflation has actually ticked higher, sitting at 7.1%. So even if you strip out the volatile components of energy and food, you're still looking at very strong domestically generated inflationary pressures. And that is giving the Bank of England a headache. Markets were very quick to price in more aggressive tightening out of the bank. Today, we're leaning at around a 50% chance of a 50 basis points hike, or about 37 basis points priced in. But the real question is the messaging that is going to come from the bank, because many people are sitting there seeing these numbers tick up and wondering about the impact it's going to have on their spending, on their wallets, and of course on their mortgages as well. There is a credibility issue at play here. The bank needs to reassure people that they do have a grip on inflation. And to that effect, we're also seeing a lot of communication come back from the politicians as well. One of the stated aims of this British government was to have inflation by the end of this year. I should also mention that all of this means that many borrowers are going to be faced with much higher mortgages. The estimate is more than 1.5 million households are going to be paying an extra £2,900 over the coming year. All of this is leading to a massive squeeze in the cost of living, which is one of the reasons why the Chancellor is so insistent on having that inflation by the end of the year. They want to squeeze every drop of inflation out of the market. The question is, can the Bank of England, in conjunction with the government, actually succeed at it? And the markets right now are unsure.
All right, markets unsure about the future trajectory of interest rate hikes. All right, looking at the market then at the moment, yes, there's a bit of recovery coming in and a huge amount of energy also coming in that particular space, especially when we talk about the financials. So HDFC Twins, HDFC Limited, as well as HDFC Bank, the heavyweight counters, have seen a sudden pickup in the last few minutes of trade, and that has really aided Nifty 50 as well as Bank Nifty both to really see a bit of a recovery in the last few minutes of trade, leading, of course, HDFC Bank leading Bank Nifty to a little bit of flat line, along with Axis Bank also gaining some momentum. So keep an eye out on the market. There is a certain bit of recovery as well as volatility in the market, but Midcap remains a spot of bother. With that, it's a wrap on this edition of Business Lunch from the entire team. Thank you so much for joining. Midcap Radar comes up next. Stay tuned for that.
Incredible. I mean, obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying every day more than 70 lakhs passengers to and fro, whereas their carrying capacity is 40 lakhs. So because of this overcrowding, many of the Mumbaikars, they are aware that there are more than 3,500 deaths every year. So on
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. You're watching Midcap Radar, as I said, but these are the top headlines. Midcap sharply underperformed large peers after a stupendous rally over the past few weeks. The Midcap 100 index slides over a percent in the afternoon session. Nifty and Sensex also slipped. Paradeep Phosphates fires up after Antique initiates coverage on the stock with a buy rating, citing huge capacity ramp-up, which will aid profitability. Forgings jumps as management reiterates bullish guidance and EV push, targets 2,000 crores in revenues only from the EV space within the next 10 years. JSW Energy gains on a double upgrade from Antique. The brokerage gives its strides in energy storage a thumbs up. Lupin's MD Nilesh Gupta tells CNBC-TV18 that Pharma generic can clock sales of over $200 million, and he sees Lupin's generic sales near $850 million in FY25. Group CFO Ramesh Swaminathan adds that margins could hover around that 18% mark despite pricing pressures. Okay, those are some of the top headlines that we are tracking for you for the markets. 30 points lower on the Nifty. We did see a sharper
fall from the highs, and we have recovered a lot from those levels as well. So we had fallen around 50 points. Right now, we are sitting with cuts of around 30 odd points. Mid-caps are underperforming, and that, of course, after the stellar rally that we saw in last couple of trading sessions. So mid-cap index is down 1% from its record high level, though some recoveries underway there as well. If we look at the Bank Nifty, that was outperforming for a larger part of the day today. It did see a sharper dip, but has recovered from those levels to trade in the green of around 40 points, and it is closer to the day's high as well. HDFC, that is a stock which is buzzing in trade. It is at the day's high, and so is HDFC Bank. So the recovery that we are seeing in Bank Nifty is courtesy HDFC Bank, which is at the day's high as well. So HDFC Twins batting it for the bulls as far as markets are concerned. So this is something that we'll be tracking as well. But what are the charts suggesting? What are some of the technical trades that you should take note of? Let's welcome Kush Bohra from kushbohra.com for a technical check on the markets. Kush, good afternoon. Thank you so much for joining us. Well, we have been retreating from those record high levels, very close, but yet not there. What are the charts suggesting now?
Hi, Sonal. First off, thank you for having me on the show. Well, the longer it takes the indices to hit that, new high, the more, tantalizing it will become for the traders, like a very well-made whodunit cinema. I think that anxiety plus, the weekly expiry is playing out today. So I think, what's more important is the fact that, where do we go from there? And for me, this is very much, a buy on dips kind of a market. So even if today we hit, or tomorrow, if we hit 18,900, nothing's going to change except for the headlines, right? So what's more important is that this market remains a buy on dips market. In fact, on Nifty and Bank Nifty both. If you see, the Nifty is in a rising channel, and it's been respecting that channel for a while now. Briefly, it slipped below that, but on the whole, it's still respecting that channel, which is a very encouraging sign. And Bank Nifty also consolidating with a positive bias. So as long as 18,700 is maintained on Nifty and 43,500 on Bank Nifty, this will very clearly remain a buy on dips market. On the upside, 18,950 and 44,400 is where the resistance comes for the Bank Nifty and Nifty both.
Okay, all right. So those are some important levels to watch out for on the benchmark indices. Kush, what would your individual technical bets be?
Two of them. I think the dip that we're seeing in the markets and the kind of correction that we are seeing in some of these stocks is actually just clearing out the froth in the market. So you should use these these dips to buy. A couple of stocks on my radar. First is Titan. The stock has been doing very well along with the market. It's showing a bit of a consolidation right now around the 3,000 mark, and that's a good sign. This consolidation could lead to a spring effect and a higher level. So 3,000, 3,030 are my targets on Titan from a trading perspective. 29.40 is where you should have your stop loss. The second pick is from the cash segment, which is KPR Mill. Again, this stock also has been doing well. A bit of a consolidation for the last couple of days. 695 and 720 are the targets. 650 is where you would place your stop loss.
Okay, all right. Those are some technical bets. Thank you, Kush, for joining us. We'll do one thing now. We'll slip into a short break. When we come back, we'll discuss more stocks and markets in particular on the other side. Stay tuned for that.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done. But I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14 I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And
Welcome back. Well, there is a sharp recovery which is underway right now. So Nifty, when we started the show, was down 30 points, is down just 7 right now. In fact, at every point, at every tick, we are seeing some recovery from the lows, and it is definitely led by Nifty Bank. Look at that, 101 points higher. There's a sudden surge that we are seeing in the Nifty Bank, and it's courtesy HDFC Bank. In fact, both HDFC and HDFC Bank are surging right now. So the impact of HDFC Bank can be seen on Nifty Bank itself. The other space which is doing really well and has seen a sharp uptick in last couple of minutes has to be the steel names. So JSW Steel and Tata Steel, both of them have surged in last couple of minutes, and the metals pack is also something which is contributing to the gains that we are seeing in the Nifty right now. So both these stocks higher right now from the lows at least. We'll have to see whether that continues or not. But yes, Nifty Bank definitely the star right now. It's higher by 110 points as we speak. We'll keep tracking that. It's the weekly options expiry as well. But let's move on, because block deals have also been the focus in June 2023. Deals worth nearly $2 billion were done so far this month. Vivek is joining us with more details and a roundup here. Vivek.
Well, absolutely right. It's raining blocks as far as Dalal Street is concerned. Over $2 billion worth of deals is something that we have seen, just in the last couple of weeks. And in June, this particular figure is even higher, given the fact that you also have to account for the couple of block deals that happened in yesterday's as well as today's trading session. So first, let's start with the latest one, Shriram Finance, large one, over 4,800 crore. Remember, Pyramid as well as TPG Capital, both have made a clean exit from this particular name. Today, two blocks, Sunset, almost 14% of equity changed hands. Delivery, a clean out trade by Carlyle. All of this have actually contributed to the large block deals that we have seen. But, in the past couple of trading days as well as last few weeks, look at the names and look at the size of the blocks that have been easily absorbed. HDFC AMC, Aberdeen sold 10% stake over 4,000 crores. Timken India, the parent entity, Singapore entity, selling stake over 1,950 crore. Kim's Hospitals, over 680 crore, sold by a private equity investor. In fact, private equity investors have been quite active in selling, as the market is within kissing distance of lifetime highs, and the mid-cap index is actually at the lifetime high. So Kalyan Jewellers, P investors sold almost 700 crore worth. Kotak Mahindra Bank, CPPIB sold worth over 5,800 crore. CMS Info, 720 crore worth stake sold. MTAR Tech, promoters sold 4.3% stake for 240 crore. And also CDSL, where BSE pared its stake from 20% to 15%, and that stake was worth over 550 crore. A lot of block deals, but a lot of them have been absorbed as well.
Yes, they have been. Thank you so much for bringing us all those details, Vivek. But that's not it. SEBI has also issued a new circular to standardize the format of trading preferences by clients. Tell us more on that, and which is the stock which is in focus on the back of this?
Well, that's right. So very interesting circular has been put out by SEBI, and the stocks that will be impacted are the, as MCX, mildly negative as far as MCX is concerned due to increased competition that could come in, and positive for the other exchanges, especially BSE. To take you through the gist of what the SEBI circular states, SEBI has issued a circular named Trading Preferences by Clients. The circular would come into effect from 1st August 2023, and existing customers will now be able to trade in all segments on all exchanges from 1st November 2023. And that basically implies that there is a 3-month implementation time from 1st August to 1st November. What analysts say is that it's an important move as far as MCX is concerned, because the move may go ahead and increase competitive risk as far as MCX is concerned. Most brokers earlier had client approval for the commodity segment where MCX is the leading exchange. They earlier had the license only for MCX, but now, however, they would be able to trade commodities on NSE as well as BSE, leading to increased competition. What analysts say is that this has been one of the challenges in the past, where both BSE and as well as NSE struggled to go ahead and ramp up their volumes. But now, they will be able to do so given the latest SEBI circular. The company, has gone ahead and sought clarity on this particular circular from SEBI, but at this point of time, a mild negative as far as MCX is concerned.
Vivek, thank you so much for joining us and bringing us those details. So that's MCX in focus. We'll do one thing, slip into a short break. Up next, we'll be joined by Krishna Bodanapu, who's of Cyan DLM, to discuss about their upcoming IPO. It's an interesting space, so stay tuned for that conversation.
Incredible. Obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch launch of Mumbai Metro 2A and Mumbai Metro 7. And in this year, over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made these metros a reality? Let's listen.
We were aware about suburban trains. There are nearly 330 suburban trains in Mumbai carrying
Vesting.
Welcome back. Well, let's put spotlight on Cyient DLM as promised earlier. It is in focus today ahead of their IPO that is opening next week. The offer opens for subscription on June 27th. Earlier today, the company said the issue size of the IPO has been reduced to 592 crore rupees, which is versus an expectation of 700 crore rupees earlier. And the price band has been set at 250 to 265 rupees per share. The EMS opportunity looks very exciting because of the way EMS players have performed in Q4. To understand the business and a lot more, Krishna Bodanapu, who's the chairman at Cyient DLM, is joining us now to discuss the business and tell us more about this opportunity as well. Mr. Bodanapu, good afternoon. Thank you so much for joining us. Well, it's a 592 crore rupee of fresh issue. Talk to us about how will this money be used? What will the promoter holding look like after this fresh issue? And what is the debt looking like in the books?
Thank you very much for this opportunity. I just want to quickly highlight that Cyient DLM has some very unique opportunities in front of us. We are primarily in the low volume, high precision manufacturing for electronics, for aerospace, defense, medical kind of industries. So with that context, we see some very, very significant potential for growth. And therefore, the idea behind raising this fresh capital is to fund that growth. 100% of the proceeds are primary, so they will go into Cyient DLM and primarily used for three things. The first is we will use it to pay down some external debt because we believe it's an opportunity to optimize our finance cost and cost structure. The second is we will use this for working capital for the next 3 years. Again, there is a lot of growth ahead of us and we will require the working capital. And the third is to make investments into, again, facilitating the future growth, be it with sales and other expenses or technology, and also one or two small acquisitions that will help us plug the capability and the capability gap that we primarily have. So that would be the use of the funds. In terms of the holding of the promoter, in which case this is Cyient Limited, Cyient Limited will hold about 2/3 of the company based on the higher end of the band for the pricing post the issue.
And you will be debt-free in Cyient DLM after this fresh issue?
We will be debt-free from any external perspective. There is still going to be some debt from the promoter, Cyient, in Cyient DLM, and that we will only pay out from the cash that the operations generates over the next few years.
And how much would that be, Mr. Bodanapu?
It's roughly 200 crores or so is the additional debt that's also there.
Okay, 200 crore rupees. Well, you spoke about growth opportunities in the EMS space. You spoke about it being a low volume but high margin business as well, or the opportunities in aerospace or defense. What is the order book split looking like? You do have defense, you do have aerospace. Can you split that for us? How much is coming from exports? And is export a better opportunity in terms of margins than domestic markets?
So right now, the four industries that we focus on, which is aerospace, defense, medical, and industrial, because this is where we see the opportunity for the high precision and high value-added manufacturing. The order book is pretty evenly split across the four. I would say that aerospace is a little bit higher, medical a little bit lower, but all within a certain range. The exports are about 70% today, 65 to 70% depending on the quarter. And we believe that there's a good balance between exports and India business. One of the reasons why we're seeing the growth that we're seeing and the opportunity that we're seeing is also because India is coming to its own as a market, and there's a lot of indigenous production, indigenous design, and indigenous need that is there because of some of the imperatives that the government has put in place and some of the encouraging things that the government is doing. So we believe that this 65% exports, 35% Indian market will continue, and that's a good place for us to be. We actually make, basis the work that we do and basis the value add, we make similar margins in India and non-India business, so we will continue to focus more from the perspective of having the right portfolio and mitigating risk rather than from a margin perspective.
Okay, all right. So margins are same both in the export and domestic business for you. Since we are talking about big opportunities, you talking about expansion plans as well. If you can just give us a sense of what kind of growth prospects do you have in place? Q4 numbers across the EMS space were really strong. Now there's a new player as well. How does the market share work with the competitors? Is it a crowded space now? And versus the industry growth, what kind of growth is Sai and DLM looking at?
So we believe that going forward from FY24 onwards, we will be at least at the industry growth rate. The estimated EMS growth right now is 30% for the Indian EMS companies, but we believe that we will be at least there and most likely higher than that. Having said that, I'll also say that our competition based on what we manufacture is more the global players rather than just the Indian players. Typically, our value proposition and our value add has come because of a globally competitive offering, because of a globally competitive manufacturing solution, rather than just something that's dependent on a particular geography or because it's dependent on cost. Therefore, we believe that the market share right now, all of us are very, very small in the global sense. And when we look at our customers in the markets that we work in, it's actually quite small. And therefore, the opportunity for growth ahead of us is very significant.
Okay, all right. So you are looking at industry level growth of around 30%. So can you talk about the current capacity that you have? You have 6 SMT lines currently with a capacity of 22.47 crores of component placements per annum. How much will it increase by, something that you're expecting in FY24 itself as a capex?
So we don't need to put in any significant capex at the moment, at least from the SMT perspective and from the electronic production. Right now, our capacity utilization between the plants that we have is roughly about 33%. So we have an opportunity to almost grow 3 times before we have to put any significant electronic manufacturing capex. Having said that, there's one element of it which is called box build, which is essentially then to do all the casings and the mechanical components around it. We do need some of that capacity. We do some of that work today. Much of it is done in our facility in Bangalore, or it is a bought out item. We do want to increase our capacity from that perspective, but from a core capacity perspective, we don't need to put in any significant capex till we get to about 3 times the current size is when we'll have to think about additional capacity.
Okay. You know, I was looking at the number of customers you had and your order book as well. So from 47 customers in 2021, it has come down to 35 customers in 2023. But your order book has more than doubled from around 906 crore rupees to 2,500 crore rupees in FY23. That means higher client concentration as well. Is that a risk for you? And what are the order inflows looking like in FY24? What is the idea of order book by the end of FY24?
So we took a conscious choice a couple of years ago that we wanted to focus on the quality of customers, not necessarily on the quantity or number of customers. So if you look at the customers that they have, they are the largest manufacturing innovators in the world today. Some of the companies whose names we've talked about, like a Honeywell or a Thales or an ABB, these are companies in the manufacturing sphere. They are at the forefront of technology, innovation, new products, and spend. So in that context, I would say actually the reduction in number of customers is what's leading to the increase in the order book, because we're able to do a much better job in terms of focusing on the customers, making sure that we get the right capabilities for the customers, making sure that we bring the right engineering to the customers, etc. So that has been one of the reasons why we've been so successful in building up our order book, and we'll continue to focus on that. Having said that, I would say it's not a huge risk for us at the moment with the client concentration, because even if you look at our top 10 customers who are 90%, While for us, they're at 90%, we are still a fairly small percentage of their outsourced manufacturing spend. So the way that we look at it is there's a huge runway of growth ahead for us. We can do a lot more with these customers. There's a lot more opportunities. And again, like I said, these are the largest manufacturing innovators. So they will continue to spend, they will continue to create new products, and the opportunities for us will continue to grow. So while there is a bit of customer concentration, I'm quite confident that these are the right customers. So it's a risk that we can definitely mitigate and manage.
Okay, last question before I let you go. Request you to keep it a little short, but you do have two segments, B2B and B2S. What is the split here, and what is the higher margin segment here, and what is the margin outlook for FY24? 10% is what you're standing at right now.
So we'll see, we definitely see a runway for growth for margin. There's various things that are going on, and we'll see that continue to increase. Right now, B2P is 95%, B2S is 5%, but the order book points to B2S becoming a much larger part of our business. As we start to execute that order book, B2S will become larger, and B2S, where we have design control, at least to a great extent, that is a higher profitable part of our business.
Okay, thank you so much, sir, for joining us today and giving us all those details. So that is Sang DLM, very optimistic about growth prospects and margin expansion as well. Of course, we'll keep getting more details on this IPO as well. With that, we'll take your leave on this edition of Midcap Radar. Stay tuned, Mutual Fund Corner when we return.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalmen should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so. And as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last.
Good afternoon. Welcome to CNBC-TV18's Mumbai Newsroom. I'm Sunal Bhutra. With me, as always, is Pavitra Parekh. You're watching MF Corner. So, Pavitra, we discuss a lot of topics today. It's going to be an interesting one again. So, we are going to be talking about value investing. What makes this category very interesting in comparison to, say, something like a growth funds? What would contra investing look like? And we'll discuss the other categories, considering that we're so close to record high as well. Yeah. Let's talk about ELSS funds, mid-cap and small caps that have done really well. Yeah. And let's get going.
We have lots to discuss clearly, so let's get cracking. We have with us Dylan Pinto, who's Senior Fund Manager Equities at Bandhan Asset Management Company. Dylan, thanks a lot for being with us today and taking out the time for this show. You know, my first question is exactly that Sonal was mentioning value investing. That is one of the investing styles that you are very well known for. For the sake of our viewers, you want to take us through what value investing really is and how does it really work for someone who's very new and, you know, looking at markets perhaps for the first time?
Sure. So, good afternoon, and thank you for having me on the show. So, I think, you know, for us, the mainstay of value investing really lies in buying businesses where probably the current micro environment is not in favor of the company. So, basically, companies that are kind of out of flavor at this point. But to us, therein lies the opportunity because we believe that substantial alpha generation really takes place, you know, when you get into these companies at distressed values. And as the micro environment improves for that particular sector or business, you know, that's where performance really comes through. So very simplistically put, buying a business at the right price and time in a particular cycle is the hallmark of value investing for us. You know, most people believe that value investing only reflects around buying something very cheap. So, you know, we very commonly talk about only buying companies below book value or only buying companies which have a very low PE. But I think a lot of times that leads us to actually invest in subpar franchises, subpar businesses, what we, you know, commonly call value traps. So I think the other aspect to remember about value investing is to avoid as many value traps as you possibly can, right? So as long as you're getting into businesses where market saturation has not arrived, where obsolescence is not a worry, where governance is not a worry, in all probability, if you get into a business which is not impacted by these three factors, over a period of time, you know, performance should track how the company grows over a longish period of time.
Okay, buy at the right price. That's your philosophy. And those are the kind of businesses that you look for as well. Mr. Pinto, you've always spoken about how value and price matter. This is something that you told us right now as well. So value funds, is this something that you are recommending to your clients at this juncture as well?
Yeah, so to us, you know, value or contra, as you know, one commonly calls the strategy, is evergreen, right? It really is about you know, buying businesses that today probably are out of flavor or distressed, but over long periods of time, we believe that there is substantial earnings growth potential in all these companies, right? So for us, that is very important. The second aspect is that a lot of people try and classify companies as only growth companies or only value companies or only quality companies. We don't really put too much you know, emphasis on that. So we believe that when you buy a business, the price you pay for that business is very, very relevant. So, you know, it's very unlikely that you're going to get an FMCG business at the same valuation of a commodity, you know, business such as steel or, you know, or energy for that matter, right? So for us, whatever business you buy, the price you pay is very, very relevant. The cycle at when you buy that business is very, very relevant. And to us, that is really the key to generating alpha from a strategy like this.
Okay, I think this is a very important, you know, conversation, especially at a time like this when you are seeing pockets of the market perhaps really surging and pockets which are holding back. Dylan, if we've already spoken about value funds, but take us through growth funds as well. And what are some key factors which really differentiate both of these kinds of investing? That's value funds versus growth funds.
Sure. So I think value and growth are both strategies that, you know, different sets of investors have, you know, looked at for a long time. And we really don't believe there is any right or wrong with any of these two strategies. In fact, you know, both strategies actually, whether it's value or growth, try and look for or try to invest in businesses where the investors believe that the current market value is lower than the intrinsic value of those businesses, right? So whether you look at value or growth, I think the end goal is really the same. But I think for growth stocks and investors that really look at growth stocks, I think those investors believe that the overall earnings growth potential of that company is probably going to be much higher than the market and their peers for a longer time to come. And that usually means that with growth stocks and growth companies, the current narrative is very strong. Multiples are usually higher on average than what you otherwise would see. And the current earnings performance, earnings delivery, and forward commentary usually are all very robust, right? So growth investing is really about being right now, looking at what's happening and following those those companies on their journey. As far as value investing is concerned, or value stocks are concerned, I think there the investors are more looking at underappreciated companies relative to what their long-term earnings potential is. And that would obviously mean that near-term narrative is usually weak. Multiples of these companies are usually at average or below average, below long-term average levels. And to us, therein lies the opportunity. So both styles are very different. Both styles obviously have the same end goal, and that's creating, shareholder value or alpha generation. And both styles work probably maybe to sometimes in different market cycles, right? Many a times we also see value becoming growth and growth becoming value. I think that is something that is fairly interesting. If you take a step back and look probably 10 to 15 years ago, chemicals as a sector, to my mind, was thought of a commodity type of business, usually traded at very low multiples. 15 years have gone by, and today chemicals as a sector is probably treated as a growth sector by the market, right? So a very good example of how value has kind of now become growth, and for a variety of reasons, right? Similarly, maybe 15 years ago, sectors like oil or sectors like lead acid batteries, for example, which are used in the automotive industry, have derated substantially, and really from what was once thought to be growth-oriented sectors have now kind of become value-oriented sectors, right? With the onset of electrification and the worry that some of these technologies will become obsolete or will not be required any longer. So these are constant debates, and that's what makes investing fun and investing interesting. But both styles have their pros and cons, in my opinion.
Okay, that's also what makes markets interesting, right? It's all relative. So, of course, if one theme is doing well, the other won't, and vice versa. But let's switch our focus on active fund management, because you've been a supporter of that theme for the longest time. But a lot of active funds now, they've not been able to cross the benchmark returns. How do you look at this style of investing in that case?
So I think, there's always room for active. It's a debate again. I think just like value and growth, active versus passive is something that has been talked about, for a long time. I think especially in the 2018, 19, 20 cycle, it was never louder noise than I've ever seen. To my mind, I think, it really depends on how the portfolios are constructed. One needs to have a reasonable active share. One needs to probably take, some bold calls. And that's really, what active management is all about. Of course, within a certain given set of risk parameters. All funds can't really, outperform at the same time. And therefore, different managers, are comfortable with different strategies. And these strategies outperform at different points of time. So I think that's really how, one should really look at it, rather than, expecting that everyone will outperform at, at every single point of time. I really don't think that's how investment cycles work.
Oh, absolutely, and which is why we encourage investors to, take a longer time horizon, also stay invested for longer to really reap the benefits of being in the markets. And the other thing is that for large cap funds, there are so many limitations, right? The sector exposure, the stock exposure, so perhaps not a fair comparison there. But Dylan, the other question I want to ask you is on ELSS funds, right? There were a lot of thoughts that were coming in that, perhaps this would now take a backseat, considering that we have a new tax regime where, you can opt for where there are no deductions as well. What do you make of that? Do you manage any ELSS funds? And do you think that there's been some kind of waning of momentum in terms of the flows there? I do know that there are benefits beyond tax saving, but, take us through everything.
Yeah. So yes, we do have an ELSS fund as well. But keeping the new taxation, aside, I think ELSS has all the advantages that other diversified funds also offer. And we always talk about wealth creation being a 5-year cycle, if not more. So from our perspective, I think ELSS, should just be viewed as just another diversified fund by an investor. And especially if you're someone who is what I call very trigger happy, in the sense that you don't have the discipline to stay invested, and you sometimes get worried about market volatility, then actually a fund like this is really what kind of would instill discipline in your entire investment in journey as such. So tax benefit or no tax benefit, I don't see any reason why investors should not continue to look at ELSS as a category. I think from a manager's perspective, the good part about ELSS is that money comes in for the long term. Most managers don't need to really worry about short-term flows into their funds or out of their funds. And that really gives us an opportunity also to deploy a lot of this money with a more flexible approach to our market cap weightings, and as well with a more flexible approach to the length of holdings that we would like to have in our portfolio. So that's really how we think about the overall ELSS category and our fund in particular.
Okay, all right. It's an interesting chat. We will continue it as well, but we'll quickly slip into a short break. And on the other side, we'll continue this discussion with Dale and Pinto on several investing categories. Stay tuned for that.
Incredible. Obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
Welcome back. You're still tuned into MF Corner here on CNBC-TV18, and we still have Dylan Pinto, Senior Fund Manager of Equities at Bandhan AMC, to talk about various different categories that you could look at. Dylan, mid-cap and small-cap funds have really been seeing money flow in, right? For the past few months, you've seen money move out of large caps and into these spaces. What are your thoughts on this category? And, for a new investor getting in, take us through some factors they should consider, because, of course, while the potential for returns is higher, there is also a higher risk that comes along with it.
So as the old saying goes, money usually chases performance, and that's these are categories where performance has been very good over the last few years, especially from the COVID lows that we saw. But I think the biggest learning for us from mid and small cap investing is that every 3 to 4 years you do get one shock, right? So you do get one drawdown, anywhere in the range of 15 to 20%, if not more. And that is something that investors today who are still very bullish and are still coming in leaps and bounds into consideration. As long as you're able to withstand that volatility and that correction, I think that this is still an area of the market where alpha will be generated for a long time to come. At the end of the day, I think over our investment journey, we've seen plenty of small caps become mid and mid become large, and that's really the thesis for owning many of these stocks for the long term, right? That's where real serious wealth creation has happened. So at these market levels, probably the recommendation would be to look at SIP rather than try and be very aggressive in your allocations towards mid and small. Valuations across the market, to my mind, are not very cheap. There could be pockets, there could be some bottom-up opportunities. But I think at the current juncture, better to be a little careful when we think about these categories.
Yes, and that is a helpful advice, right? Because already we have seen such higher levels. To put in all your money in this space could be a little risky, and that advice comes handy in that case. So from that category, let's move to thematic funds. So many of the themes working well in the markets, apart from the entire broader market space as well. Is this a space where one can deploy some money basis the cycle? Is this a complete no-no for somebody who's doing it for the first time?
Well, to my mind, thematic categories are usually part of the non-core allocation for someone. So usually a top-up kind of product. Preferably for savvy investors who can stomach risk, investors who can stomach, sometimes several years of underperformance as well. However, having said that, there have been, a couple of themes that have done well for a long period of time. And I'm talking about, at least a 10-year kind of horizon. We've seen very strong performance from themes such as transport and logistics, from BFSI, from IT. So we've seen, certain themes that have done well and have, withstood market cycles as well. So all in all, not something for investors to really shy away from, but definitely investors need to look at, what are these themes that they're investing on? Are they sustainable in the long run, even if they get the near-term cycle, wrong? And are they willing to stomach some sort of underperformance when that particular theme or that particular sector, goes through a down cycle? And this does really happen every 4 to 5 years. So I think as long as you're able to withstand these, there is absolutely no reason why, someone should not look at thematic funds as well.
Okay, got that. That is on thematic funds. Let's now split it up for investors. Say someone is conservative, someone can take a moderate amount of risk, and someone is a high risk taker. What do you think the breakup should look like in terms of portfolio allocation here?
Yeah, so I think firstly, allocations in general are very person specific. So depending on one's risk appetite, depending on one's, cash flows, I think, individuals will have to, take help from their advisors and accordingly, allocate. But on a broad-based basis, I think if you're a conservative investor, I think probably looking at, categories like balanced advantage or equity savings, I think that's probably more suitable, especially for people who want to try and minimize volatility, to the maximum extent possible. For those who are more balanced, who are able to take a reasonable amount of risk, categories like large, flexi, value, I think these are the ones that probably make more sense rather than moving into pure out-and-out mid and small cap strategies. And of course, for the risk taker, while I still believe even a risk taker should have a balanced approach to investing, probably mid and small allocations can potentially be a little higher if they are able to withstand those drawdowns and that volatility that mid and small cap are generally associated with.
Okay, the next question that I'm going to ask you, and I'm sure you must have gotten it a lot in last couple of days, is because we got a slew of data, be it the Fed rate pause that came by, but an indication that there could be further hikes, be it the RBI rate policy. And now we are very close to record high, just flirting with those levels. SIP is still the way for investors?
I think so. I think when markets are at average or above average valuations, I think the smarter thing to do is to come in through an SIP STP sort of route. I think one-time investing or very aggressive allocations to equity should be done when markets are at average or below average multiples. So given where we are today and in the context of what's happening both globally and domestically, my advice would still be to go through the SIP STP route at the current juncture.
All right, we got that. That is very helpful advice, Dylan. Thanks a lot for taking us through all of these various different sectors that we can look at, and you know how the investment approach can really be different when you look at a value style or a growth style. So I'm sure that will help all of our viewers a great deal. Thank you for joining us on the show today. Sonal, interesting, right, to discuss all of these and how things also change when you're at different cycles of the market. Like he was pointing out, when you are at these all-time high kinds of levels, maybe you should hold back a little, go the SIP route rather than just going in all at once.
Oh yes, and you know that idea of how to approach different categories, how to maybe approach active funds or passive funds or value versus growth as well. That was a great example. So yes, with that we'll do one thing. We'll take your leave on this edition of Mutual Fund Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal stocks? How is India placed as of now? Would there be a need to curb the supply to the non-power sector?
I don't think it is so, and as you have already seen, from 13-14 to till date, 13-14, I think it was 572 million ton of the production. Today we have almost reached 800, nearly about 850 million tons. And this year we are crossing 1 billion. This is the first time, and this is the last year, I mean the year which passed away just now. In that year, our total production was around nearly about 834, 800. This is the ever highest. This is the ever highest. Keeping that in mind, this year also have kept the target, a very ambitious target. And production is going on accordingly. Normally April, May, June, this is the time when production is reduced. But this time it is going on very well. As far as thermal power plants are concerned, little more than 34 million ton of stock is there in thermal power plant, which is almost sufficient for 13-14 days. And around 65 million ton at the pithead, that is at the Coal India, SCCL and all those places. I feel there should not be any problem. And last year we have supplied around 13.
The Asian markets, there's not much coming through because most of them are shut.
Hot and heavy action continues in mid-caps and small caps.
This is a $100 million plus revenue kind of opportunity for me.
The Nifty itself is down about 20 points. So we're starting with a negative bias.
The beginning of a bull market, you will see a lot of these liquidity-driven movements in the market.
Very meaningful addition to our overall portfolio in America. And for sure, we think it will certainly move the needle.
From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch.
I think where the question lies is what is going to happen in terms of the pace of rate cuts.
This year, we will probably just, have some revenue. Just notch up some sales.
35-point kind of slip from the highs for the Nifty. There you have it. So we've moved back into the red as well.
So CLSA has downgraded the stock, that is IDFC First Bank, to underperform from, a buy that they had earlier.
Prime Minister Modi will receive a ceremonial welcome at the White House South Lawns. This will have all elements of a state visit.
For the markets, 30 points lower on the Nifty. We did see a sharper fall from the highs, and we have recovered a lot from those levels as well.
Well, that was the day so far. You're with us here on another new edition of Closing Bell, last hour of trade coming up this Thursday. And it's looking a little skittish out there. I'm Prashant. With me, my colleague Nigel, and our colleague Surabhi will join in just a bit. Nigel, hi.
Well, hi, Prashant. A little bit of a skittish day, yes. Not yet at all-time highs. I think we should stop talking about it, right? Because every time we go within kissing distance, we're seeing a bit of a downtake. But it's going to be an interesting final 60 minutes.
Yeah.
Thursday, final hour of trade, the expiry plays out. So let's see how it goes.
I mean, I was joking with somebody, the number of adjectives, flirting, kissing, what are the others? Nearby, close by, almost there. I think, you'll know when it happens because we'll make some noise when it finally happens. But no, today seems a little unlikely. Of course, things could change. Just a quick thing, right? I mean, and by the way, just look at the last hour and a half or so of the market. It's completely changed. The Nifty was recovering nicely, starting about, I think, 1 o'clock. Basically, the low was 1 o'clock. And that recovery, that bounce that you see, looked like we were, coming up to nice levels. We were in the green. And starting 150, there is this new sell-off which has started, and we're down back down about 0.25% or so. So that's what you have. It's very clear on the graph there. So post sell-off, new sell-off post 150. Again, it's not very large, but we are basically back down to the day's low, which is down about 74 points or so. So there is selling which is starting to emerge at high levels, which is which one is not used to usually. And I think that would still be true that the market is refusing to stay lower for more than a few hours. But I mean, you need to pay attention if at the margin the texture is starting to change a little bit. We've seen that for the last couple of days. Now, HDFC Bank and ICICI Bank, they were, and maybe they've also changed a little bit, but they were up about 1%, 0.5% on your screen. And with that, they are the biggest contributors to what the Bank Nifty is doing. Nifty Bank was doing a little better as compared to the Nifty itself. And small caps and mid caps, I think today is the first day after many sessions where you've got even a 1% fall. The mid cap index is down 1 and the small cap index is down about 0.75% or so. Surabhi is joining in. She's running down.
Popped up between the two gentlemen, suddenly miraculously appeared over here. Now, we were having a very good conversation with Karan Taurani on Z, not just Z, the media landscape, ad trends and all of that. So, just quickly running from one studio to the other. But look at the screen, guys. Prashant, this is what we were discussing, right? What the Fed chair said was not new, but that reiteration coming in and the Swiss central bank also coming in and raising rates. I guess somewhere the bulls have realized that this is not going to be a free, easy lunch, an easy ride to the end of the year. Central banks aren't quite done yet. And maybe some of that reality is getting priced in. But this is quite a steep fall that's coming through. So, Nigel, we thought you'd come back and, we hit it with a bang. I think we'll have to wait a little longer.
Par for the course, the kind of pullback that you're seeing. I have to say that after the kind of run that we have seen, par for the course, the US markets on a 3-session losing streak. Well, we are consolidating, so we'll wait by, let them stabilize, and then we'll hit it out of the park. I think that's the word that's coming in. And I think a couple of days of underperformance in the mid-cap and the small-cap indices actually is good.
Yeah.
Because everything was flying and stories, when those stories keep getting narrated, then I get a little bit more, skeptical about the market. So it's okay. But in terms of the crucial level that you're looking at today, this morning as well, we put out the level. It is 18,775. That's the crucial level. The day's low as well is very, very close to that mark. And the 18,800 put, the premium's around 23 rupees. So those that are writing this particular strike, they're pocketing the 23-25 rupees odd, and they're hoping that the 18,775 odd level does hold out. For the time being, we have held out that level. So that's the positioning, particularly for the last 60 minutes or so. And we are talking about block trades, large trades taking place. In the last 5 minutes or so, I've seen 5 crore shares taking changing hands on a smaller counter. That's HCC. Just pull up the intraday chart out there. 5 to 7 minutes ago, there were 4.5 to 5 crore shares of HCC that changed hands, and that stock is suddenly did see a bit of an uptick. So, big change of hands is what we have seen. But how do you position yourself in the final hour of trade? And it's going to be quite a tricky one, I think. Mitesh Thakkar joins us to tell us exactly that. Mitesh, 75 points lower on the Nifty, you still want to avoid it? Or do you think at some point of time you look to get in?
So, Nigel, my belief is that I think, the market, despite making a fresh high, I think lacked the momentum to see any kind of continuation. The first hour, we made a fresh high about 10,882, but made a 5-point higher high, and we've tapered off again. I think this is a market which is very clearly sluggish. The indicator position isn't very healthy, and I think we could now head towards the lower end of the range, which is around 18,650. So broadly, I think, if you've been deploying range bound strategies, if you're shorted at higher levels, maybe around 18,700 and then 18,650 is where you would want to take some profits. Only if you break 18,650, we'll look at a trend reversal. So I think it's still a market which is contracting and consolidating. And on the stock side, I think, with this fact that the breadth is doing well, but the large caps are correcting, I think some shorting positions have been added, and that's what I recommend right now. TVS Motor is looking like a sell. Keep the stop at about levels of 1341 here. Look for targets of 1290 on the downside. And Biocon is a sell as well. Here I would recommend selling with a stop just above levels of 244 and a target of around 226 on the downside.
Okay, got that. Thanks very much, Mitesh, for the calls. We'll come back to you in another couple of minutes to get some more ideas in. But speaking of ideas, the one that the market has been fixated with is life insurance. These stocks have been flying around like there's no tomorrow. The pullback from the February lows has been nothing short of dramatic. And many of them, actually HDFC Life, that's been the torchbearer, so to speak, making fresh 52-week highs almost on a daily basis. Yash is here with some perspective on this. Yash, you of course spoke to the HDFC Life management just last week. Tell us what's changed, this complete reversal in market sentiment towards life insurers.
Well, Surabhi, before I tell you what's changed, there's an interesting fact. On June 28th is when we celebrate the Global Insurance Awareness Day. And looks like these life insurance companies are already celebrating that with the kind of moves that they've seen. Just look at some of these moves. In the last 1 week itself, something like an HDFC Life is up 15%, ICICI Prudential Life is up 12%, Max Financial was a late mover, started moving in the last couple of days. That is now up 18%. SBI Life 5%, Also, LIC, which has been an underperformer so far, is up 8% in the last 7 days itself. Now, this particular move which we've seen in the last 1 week, that has brought these stocks very close to their 52-week high levels. In fact, HDFC Life has been making a new 52-week high since the last 3 days. SBI Life is just about 2.5% away. ICICI Prudential Life about 5% away. Max Financial is still about 10% away from its 52-week high levels. LIC again 13% away. Now, coming back to your question in terms of what has changed. FY24 as a year was expected to be a weak year for life insurance companies simply because of two reasons. Because of the taxation change which happened in the budget, a lot of advance buying of long-term savings policies happened in the month of March itself. That was one reason that gave a strong base to grow on. The second reason was incrementally it would also affect fresh buying of these long-term savings policies in FY24. But the interview that we had with HDFC Life, that came as a very refreshing change to that entire setup. They gave a very strong commentary. VNB growth for FY24 expected to be in mid-teens, APE growth again mid-teens, margins expected to be in 28 to 30% bracket for HDFC Life. That strong commentary from HDFC Life sort of gave encouragement to the entire sector, since of course the whole business won't go to one company. Other companies will also grow, maybe not as much as HDFC Life, but there will be good growth, and that gives hopes on FY24 being a strong year. Of course, there are different triggers for different companies. ICICI Prudential Life has a new MD and CEO in place. Max Financial, there's been a lot of catch-up trade which play out. LIC, there are roadshows which are happening in Hong Kong and UK. So all these companies, different triggers. Of course, one common trigger of a strong FY24 is what has led to this rally in the stocks.
Okay, got that. Thanks for the refresher there, Yash. It's been quite phenomenal, really. By the way, look at that chart. I mean, fall from the highs of over 100 points. This slide is only increasing. I mean, we're talking about a 73-point drop from the top. Of course, we've lost 80,800 in the bargain. And there's weakness all around, whether it's technology, whether it's Reliance, or whether it's the banks for that matter.
Surabhi, just one more point, 18,770, that's the low of the day. Numerous times we have gone to that vicinity of around 18,770, 18,780, and we have bounced off that. So that's clearly the level that the bulls are trying to defend. If we break that 18,770 odd mark today, we'll see a sharper slide. So yes, we're down 70 points odd, but we can easily fall more than 50 points if we break 18,770 odd, given that it's an expiry-related phenomena that could play out as well.
Oh, absolutely. We'll keep that marker in mind.
Yes.
Let's see. Still got plenty of time, before today's session closes out. Let's bring in Deven Choksi into the conversation. Deven, we'll talk about the overall market fall today in just a bit, but since Yash brought up the insurers, I want to get your sense. There's a lot of enthusiasm that's now built back into stock prices, maybe because of the kind of strong commentary that we got from HDFC Life. But would you give it more on the upside? I mean, how do you find valuations for some of these large private insurers?
Yeah, very good afternoon. If you look at, I think, the monthly collection figures of all insurance companies, life insurance companies, that is where probably I think you get more conviction. In fact, I think for last few months, I think we have been suggesting that new business premium and the value of new business in life insurance companies case, I think is recording a growth of 20%. It is sustaining at that growth level on a year-on-year basis. Should this particular trend continue, which in all likely it is likely to be continued, I'll narrate, I think, some of the points, I think, on which it is believed that it will continue. If this growth in the new business premium continues, then in such situation, we are expected to see new money getting into some of the insurance company stocks. Also, on the backdrop of last few years, wherein I think these companies haven't performed on the stock market, they have actually remained sideways or underperformed. I think now the fresh money is entering into it because the valuation on time basis have got corrected, if not on price basis completely. So I think with the growth, these valuations are now getting more reasonable than what they were before in last 2 years. As far as I think the new prospects are concerned in the business, IRDA has actually allowed the life insurance companies to pack the health insurance along with. At the same time, I think the newer insurance product like group insurance products where they do not require the IRDA's permission, I think they are also allowed to be introduced, I think, by the insurance companies. So given the strength that some of these companies are having currently in product launches, I think this augurs well. At the same time, the balanced portfolio between the single premium and I think the par and non-par policies. That is where I believe that I think likes of HDFC probably scores over many of others. So I guess I think that's where the rally is continuing, or maybe I think new money is getting into this term.
Okay, well, Devin, stay with us. Lupin is the stock that we've been kind of getting to you from the morning. They've got that approval to sell the drug Spiriva generic in the US. They'll start selling it from the second quarter of this financial year. What's the impact going to be? Because this is a big one for them. My colleague Ekta caught up with Nilesh Gupta, managing director of the company. Listen in to some of that commentary.
This is, I think it's a great deal for us. I think it's a great moment for India as well. This is the first DPI for Spiriva. It's the first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal. From our perspective, it's obviously a large molecule. It's, $1.2 billion or so. It's going to be slow. It's never a very rapid switch with these complex generics. So we hope to launch in the upcoming quarter. Obviously, we're the only generic at this point of time. So it's going to be a nice opportunity.
Any foreseeable competition that you see probably in the next 2 to 3 years? Any filers that you might have heard of?
So no filers as of now, as we're told. There likely will be an authorized generic at some point of time, but other than that, we don't see competition at this point of time.
The average assumption is that the price erosion would be around 35 to 40% and market share of around 35 to 40% for Lupin eventually. Is that a fair assumption that we are working with? How aggressive do you think Boehringer Ingelheim will be?
Yeah, you're starting to triangulate your numbers. No, from our perspective, I think we have to see. This is a unique kind of product, right? I think it's a very complex product. There's a lot of regulations that we had to go through and the like, and I think all of that should get reflected, one, in the pricing that we're able to command, but I think also in the market share that we eventually get as well. So I think people will obviously appreciate the fact that there's a true generic, but the offtake will be slower, as we saw in albuterol as well. And then obviously the pricing, we'll see how the dynamics work out.
$140 million is the peak estimate in terms of sales, probably by FY25 odd. Is that a fair assumption?
I heard that number. I don't think that number is unfathomable. We have had generic products even bigger than that, so let's see where that goes.
What does this do to the US sales? Because at one point in time, you did hit $200 million in terms of quarterly sales. Then you came down to around 175 odd. What is the average run rate that we can now expect because of Spiriva generic?
Yeah. So we're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million. I think at peak we were over 1.1 billion in the US. So there's a lot of room for us to crawl back before we start growing from the highest level that we achieved. But I think products like this, and I think this gives a lot of confidence for future products, right? So if we can do a DPI, now there's any other DPI that we can do as well. There's a pipeline of over 30 inhalation products in our portfolio itself. So I think there is a lot of room to grow out of this one. Thankfully we've toughed out. We've been saying that, okay, this is the bottom, this is the bottom, this is the bottom, and the bottom kept going lower and lower. I think we saw that in Q4. We're seeing that in Q1 as well. We're back to that $170, $180 million kind of number. And that number is a solid foundation to build on with products like this.
Okay, Lupin is also turned around, by the way. The high today was 868. It's now at about 849 or so. So come off with the rest of the market. Devin, any thoughts on this one, Lupin? By the way, we had asked the Lupin, we had the Lupin CFO with us as well, and we asked him about overall industry, the pharma industry, and he did say that pricing pressure in the US still exists. He said high single digits to early double digits is the kind of pricing pressure, but it is steadying there. Any thoughts?
Yeah, Prashant, I think in general, the companies with the specialty generics or complex generics, as you want to call it as, I guess I think they are relatively better off as far as their US portfolios are concerned. Probably Sun and the Ciplas have already moved into this particular space earlier, and they have seen themselves succeeding in the US market with some of the specialty products. I think Lupin is making the entry out there, and probably I think this should be going well for them. But I heard the management carefully, and I guess I think they are right. Probably I think one cannot be expecting an immediate response to this particular products, and probably I think resulting into a higher amount of sales. It might be a slightly gradual process as I see it. Since we don't have the full coverage, I would refrain from putting across any projection numbers. But I believe that at least this is making little better case for Lupin than what it was up till now, as far as I think this product launch is concerned.
Okay, all right. Deven, request you to please stay with us. But before we do that, the markets, we went to around that's 18,770 odd. We have bounced closer around 40 points from there. So that's clearly the line in the sand just for today, for the final 60 minutes or so on the downside. You're keeping an eye on that. What's helping the find back? I think L&T and Bharti Airtel. Pull up the intraday chart of both those two. I think that's trying to fight back a little bit. They are heavier weights on the index. That's why I'm just pointing that out. Yes, L&T is helping. Bharti Airtel as well should come up for you on the screen. So we're up 45 points from the day's low. Can we sustain this up move is important because we've been seeing at high levels there is some selling that comes in. Time to slip into a short break. When you come back, our alpha manager of the day, Ajay Vora of Nuvama Asset Management, will be joining in.
Incredible. I mean, obviously the real car is incredibly impressive and has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive.
It's amazing how they have managed with all the shapes and all the soft edges and everything, so I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time, it's finally here, and everybody loves to see it.
This is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters.
Welcome back. Well, a couple of the exchange stocks have had a pretty interesting session today. There is a SEBI circular that has come out, and it talks about standardizing the format of trading preferences by clients. As usual, fairly technical. Let's ask Vivek what this means, because BSE has been climbing higher. It surged 5% today, whereas MCX has been under a bit of pressure. Vivek, what's going on?
Well, that's right. So a couple of days back, the SEBI circular has come out. It's titled Trading Preferences by Clients. And, this particular circular will come into effect from August 1st, 2023. And, from 1st November, it will actually be implemented. So there is a 3-month window or a 3-month implementation time. What it basically means is that existing customers will be able to trade in all segments on all exchanges from 1st November 2023. To simplify it further, what it basically means, and especially in the context of MCX, what we understood from analysts is that this particular move increases the competitive risk for MCX, given the fact that in the commodity segment, where MCX is actually majority, which has the majority market share, and most of the commodity trading is done on the MCX platform. Now you will be able to do it both on NSE as well as BSE, given the fact that most of the brokers earlier
who had exclusive types with MCX will now be able to do it both on BSE as well as NSE. So the same clients can now trade on NSE as well as BSE's commodity platforms. And this actually, according to analysts, has been one of the key challenges faced by both NSE as well as BSE to go ahead and ramp up their volumes. Also, what we understand is that the company has already reached out to SEBI and they're looking out for more clarity. We'll wait and watch out for this one. But at this point of time, mild negative for MCX, given the fact that there could be some loss of market share to both BSE as well as NSE.
Okay, all right, Vivek. Thanks very much for that. We'll keep that in mind. By the way, this is pretty historic. I mean, what you're seeing on the screen, the stock is not reacting. It's been reacting to this for many, many months now. But the deal has been announced. If you go by Bloomberg reports, GE Aerospace signs the accord with Hindustan Aeronautics. So that this is a big, big mega engine deal where the manufacturing is going to take place jointly here in India. This was the expectation in Prime Minister Modi's visit, and it's finally been done. I guess, not so much from a stock price perspective today, Prashant, but more from a sentiment perspective. It's a big milestone, right? We've been talking about the indigenization story, technology transfer. This is a big one for the sector.
I mean, if this is actually, and by the way, this is our colleague Parikshit who had first reported this about 2 weeks ago, that this is going to happen. Now it has happened, as he told us. But absolutely, I mean, even with things like phones, right? The big criticism is that we are not developing technologies. It's all assembly.
It's contract manufacturing
of
some sorts.
Right?
Yeah, assembly.
So, and that's the lowest value part of it's the last 2% of the entire value of the product. But if this is, of course, I mean, a technology transfer, as Parikshit told us, this clause in this MOU gives for that, and progressively more technology transfer over the years.
Up to 80%, I remember Parikshit saying, in the latter part of the deal.
And aircraft, I mean, there's a holy grail, right? Yeah. I mean, in terms of patents and technology, etc.
Engineering, marvel, absolutely. Okay, I think we still have Deven with us. Deven, not sure. I mean, this is a bit out of syllabus, but in case you have a view either on HAL or if you want to make a quick comment on defense as a whole, because these stocks have run up tremendously. HAL is up 100%. Some of the others like Masgao Dock up 400%. So what's the advice to investors? Still buy or wait for a cool down? How do you approach this defense space?
Well, I think on one side, the opportunity basket is opening up. Clarity is more emerging as far as I think the order book position is concerned for companies like HAL or for that matter, BEL, even in other cases also, I think some other engineering companies, they have relatively more amount of visibility as far as their order book is concerned. But few things have to be kept in mind. These orders are going to get executed over a period of time. So it's not going to happen that overnight some extraordinary amount of execution will happen. No, that cannot happen. Probably I think it will be on a staggered basis. It will happen over 3 to 5 years time for sure. So better visibility, of course. But at the same time, these businesses do come with a very tight margin. They are very, very competitive margin. So as a result of which, I think many of these companies probably, I think, would not be expanding the profit as much as I think they are basically getting the valuation today. So that part, I think, is slightly a mismatch as I see it currently in many cases. And maybe that calls for some price correction, or if not fully price correction, then the time correction into the valuation. That could possibly happen out here. The offset clause is basically, I think, more interesting because once you have the imports and probably you start sourcing domestically also from India for the export purpose as well, I think that is more interesting because that builds the entire ecosystem for the country. And that is what is more exciting. So maybe I think under the shadow of HL or BL, I think there are other companies which are smaller companies comparatively, and they could possibly have relatively better times going forward because they are part of the ecosystems. They could scale up, I think, as big, probably, I think, over a period of time. So one could possibly start identifying those kind of stories which are probably more looking attractive at this point of time.
Okay. All right. Thanks a lot for that, Deven. I think Parikshit will be joining in just a bit to fill us in with more on that. But for the time being, I think let's focus on IDFC First Bank. That's under pressure. CLSA, they have downgraded the stock. Abhishek's with us to fill us in with more details. Abhishek?
Well, Nigel, as you mentioned, CLSA has downgraded the rating on IDFC First Bank to underperform from buy. However, they have increased the target price to about rupees 85 per share from the earlier target price of rupees 80 per share. They say that IDFC First Bank has been one of the best performers on a year-to-date basis. So it has also outperformed Bank Nifty by about 35% in last 6 months. So while they like the bank's compelling loan growth story or the growth story, however, they think that the valuations on price to book value of 1.8 times 1 year forward is on the higher side and does not reflect the unfinished journey on the ROE improvement that the bank has undertaken. So they believe that the ROE of the bank can touch about 14% by FY26 when compared to about 11% core ROE that the bank recorded for the quarter of Q4 FY23. So which is why, they have downgraded the stock. Back to you.
Right, so the stock's down about 5.5% as we speak right now. Now, the HAL-GE deal, which my colleague Parikshit reported a fortnight back. Parikshit is with us with just a revisit of that story. I mean, Parikshit, the exciting bit about this is the technology transfer, which you'd highlighted will happen. Take us through the contours of what you'd reported and what, of course, is coming out now.
Well, we're also learning from sources in the Indian industry and the Indian government that the deal has now been signed. Why is this significant? Is because this had been in works for almost 5 months, and even before that, since 2012. An MOU had been agreed upon earlier, but we were not happy with the level of technology transfer. But now we believe, and this is coming from top sources, that we are likely to get 80% technology transfer by value over the next 3 years. This is going to happen in phases. Initially, we are likely to get the jet engine parts from GE in a CKD and SKD form. And by the end of a 3-year period, 80% of the value addition to the jet engine will happen in India. Now, as compared to some other deals that we have with other nations, that is royalty per product, in this case, most probably, we are going to pay a one-time fee to the United States and to GE as well. This could be a little short of $1 billion is what we're hearing from the government. A very important deal for HAL, for the Indian government. We're talking about jet engines which will power the Tejas Mark II aircraft and our indigenous fighters in the years to come. So this really opens up collaboration in the defense sector. And we were speaking to Bharat Forge yesterday, and they also wanted to be involved in this project in some way or the other. And we also are picking up from the Indian industry that 600 to 700 Indian MSMEs could benefit from the supply chain of jet engines manufactured by these two companies, possibly in Koraput and Odisha over the next few years.
Okay, Parikshit, thanks very much for that, and more on that story with Parikshit, over the course of the evening as we get more details. But this seems to be pretty significant. We'll try and have the management of HAL also join us, at the earliest, and ask them about what, of course, has been signed and what all it involves. Now, Ajay Vora is joining us now. He's head of equities at Novama Asset Management. Ajay, good to have you with us here. Thank you very much. HAL, of course, is what we were talking about, but it kind of also puts the focus on defense, right? In a big way. Stocks, of course, have rallied, but what do you make of it? Do you own anything in the portfolio? Do you like any of these names? If this is directionally, if this is where it's going to go, then there could be a lot more value creation. When I say directionally, I mean direction towards technology transfers, etc., across a range of industries. Here we're talking about aircraft, but there are all other kinds of sort of weapons which we import right now. But we're talking about making in India with the transfer of technology. What do you make of it, Ajay?
So good afternoon, Prashant, and thanks for having me. So honestly, it's definitely a great deal for the economy, for the government, and for the entire ecosystem. And this is exactly in line with what we have been discussing on what the government has been actually promising over the last few years. And we all know this takes a little bit more time, and eventually this has materialized. But I think it's great for the market perspective also, because these kind of sectors offer very large opportunities, and that is now materializing. So in a way, if you look at sectors like defense or railways, these were non-existent a few years back. And we have amazing opportunities in these spaces now. So coming back to the how stocks have done, obviously a lot of positives are priced in to a large extent. So, there can be some sort of time correction. But my sense is from here on, if someone is really having a long-term view on these sectors and these names, there can be a reasonably decent value creation happening over here.
Okay, so that's the call on defense. Ajay, hi, good afternoon. What else? I mean, this has been a red hot market, right? Specifically mid-caps in the last 2.5 months. Where do you still see pockets of opportunity?
So, hi, Surbi. So, if you recollect, in our last conversation, this is what we had discussed, that we were getting more and more constructive on the mid and small cap side, considering their underperformance. And also, if you look at it, the whole setup was pretty much ripe for mid and small cap to outperform. So, falling interest rates, falling inflation, and earnings growth was also likely to be pretty strong. Basis that, we have seen almost 20% rally in BSE mid and small cap indices. Versus say 12% for Nifty. So that clearly tells you what sort of rally we have had over the last 3 months. And this pocket, I think, is coming out of significant underperformance over the last 2-3 years. And in spite of this rally, there can be some sort of retracement. But we are looking at more constructive stories and themes over here, which can deliver significantly higher returns over the next 2 to 3 years. So needless to say that this 20-30% move in stocks doesn't take away the long-term, compounding trajectory from most of the stories that we are tracking.
All right. Hi, Ajay. Just hold on to that thought. We have a bit of a 3 p.m. move that is playing out. The markets have again taken a leg down since we have expiry that's playing out. 18,770, that's the low of the day. We're just around 7 to 8 points away from those levels. And we have seen that when we visit that level, it's bounced a little bit. But crucial that we hold on to that, otherwise we could slide quite a bit in the last 30 minutes or so. Well, Ajay, just doing a quick market check on that front since we have expiry that will play out. But Ajay, everyone's talking about what to buy. In this sort of a market, I think it's quite prudent to think what to sell as well. Which story has already played out? Because now, the stories, once they start playing out, everyone's giving you a stock tip. We're not at reached that euphoria stage, but which is the sector that you would be a little bit cautious on?
So you're right, Nigel. So, we've had almost non-stop, I would say, a 12% rally, almost 2,000 point rally. And we have oscillated well, from 16.5, 17 times PE to now almost 20 times at the index level. So we are looking at more like, 940 rupees EPS in FY24. So we are almost there at 20 times. So I would say that, we are closer to the fair valuation right now. And therefore, we need to reassess, the sectors which are looking pretty much expensive. So we feel that, somewhere if you look at the whole cap goods sector, it's running well ahead of its time. And, it's more of an order book driven business. So execution will definitely take place, but there is a limit to which the execution can be executed. So broadly, we feel that the valuations are very expensive in that space, and one can look at profit booking, in few of the very expensive names.
Okay, so Ajay, if I remember correctly, in our last conversation, you were actually a little cautious on banks. This is a few weeks back, and actually the bank Nifty has been underperforming. I mean, we've not seen any kind of a blowout move whatsoever, even though FII flows have been still decent. So what is the sense from here on? What is troubling the banks? Is it the expectation of a margin decline, and how would you approach it?
So the whole, the thought was that if you look at it now with inflation falling, it can have some impact on the growth rates as well, right? So credit growth, which had gone to almost 17-18%, can drop down to say around 12-13% going forward, with inflation also coming down. And most importantly, the ownership was also pretty high across most of the names. And the supply overhang, you must have seen pretty large blocks happening in Axis and Kotak, and now certain names in the financial side, the NBFC space. So there was a reasonably higher supply which was expected to come in. And considering, the valuations were not as cheap when the bank Nifty was at much lower levels. So all put together, we thought that, considering the over ownership, reasonable valuation and the supply overhang, we thought that there can be a pause to the overall, bank Nifty rally. And we feel that, still, if there is a couple of, few percentage points of retracement from here on, then it gets into a really interesting opportunity. We would wait for that kind of correction from here on.
All right, Ajay, before we let you go, if I remember correctly, I think you were talking about Pharma the last time as well. I mean, a couple of times ago, late April, if I remember right. What's the view out there? And if you could share a couple of stocks, I'm not sure, but I think you briefly mentioned Glenmark. You could correct me on that front. But what's your view on Pharma? And do you believe that the best is yet to come?
So I think you recollect pretty well, Nigel. We spoke about Pharma and especially Glenmark. So, when we evaluated almost 3 months back, we saw a lot of value in that space. And fortunately, that space played out pretty well for us. Coming back to, Glenmark, as I said, that, large part of the valuation, I would say reverting back to the mean has taken place. Now it will be more like, how they deleverage on their balance sheet and also improvement in their profitability because of reduction in R&D spend. We need to evaluate at that point of time. But the idea is that, when we spoke about it, the stock was trading at less than 4 times EV to EBITDA. And therefore, we found a lot of value over there. But if you generally look at the whole space, the undervaluation of the entire sector is now getting corrected. And therefore, most of the names are trading at fair valuations. And in fact, in this rally, that has been the case with few other sectors as well. So if you look at NBFC as well, most of the names were trading, way below book value. And last few couple of weeks rally, we have seen that also reverting back to mean. So, the best part about this rally was that, it has been pretty secular across most of the sectors. And now we are looking at more like fair valuation rather than, below mean valuations.
Okay, got that, Ajay. Thank you very much for joining in. Good having this perspective from you, and we look forward to our next conversation. We do have to take a quick break with the news that the markets are managing to just hold above that low, that intraday low that Nigel's been talking about. So 87,770 for what it's worth there's a fight going on, but there's a lot of momentum on the way down. So let's see. And we still have a good 20 minutes of trade left. We'll take that break, come back and get you the trading calls for the last 20 minutes.
We understand that the company has finally received the US FDA approval for the generic version of the Spiriva drug, which is used to treat asthma.
The CNBC-TV18 news break has been confirmed. US FDA has indeed given a nod to the company for Spiriva.
We look at the addressable market, we think it's about somewhere in the zip code of $500 to $600 million.
It could certainly be a very meaningful addition to our overall portfolio in America.
The first DPI for us to be approved by the US, but it's also the first DPI to be approved out of India for the US. So I think it's a big deal.
What is the average run rate that we can now expect because of Spiriva generic?
We're at around 180 odd million at this point of time, right? And we'll launch in the next quarter. I think obviously it gets back to north of that 200 million.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Prahlad Joshi. Sir, thanks for speaking with CNBC TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it. And it is a quite motivational to all workers. And I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm. And even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind. And I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018 and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be, it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that, we will see it. But it is a fact that now, after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that. But we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of.
Welcome back. That battle continues, just holding on to that 18,770 odd, but the pressure on the downside is quite immense. Let's see whether or not this time around as well we can pull back. We've got around 19 minutes or so to go, so let's see how this one goes. But let's move on then. An important announcement is expected from the MSCI tonight that could have far-reaching impact on emerging markets, particularly India. What's the expected announcement and the impact cost? Well, Vivek joins us to tell us exactly that. Vivek.
Well, thank you. It's an extremely interesting event that's expected tonight, that could actually have a significant impact on India's weightage in the emerging market universe. So positive outcome from this particular event could actually see India benefit quite significantly in terms of foreign fund inflows as well. So what is the event and what's exactly keeping us excited? So today evening, the MSCI will actually announce the 2023 annual market classification review results, and the reason we are watching it quite closely is to see how MSCI decides to classify South Korea. There's a likelihood that South Korea may be put into the watch list for actually going ahead and a recategorization into a developed market from an earlier emerging market. However, we need to understand that the likelihood of such an event, and in case there is an upgrade for South Korea, how will India benefit from such an event? So to give some background, MSCI in fact published in its 2023 Global Market Accessibility Review on June 8th of 2023. However, over here, MSCI did not change any of its previous ratings on South Korea's 18 accessibility measures, which it actually applies to assess market accessibility. However, the review notes that it may only adjust the relevant ratings once, relevant ratings once the proposed measures are fully implemented and tested by international investors. Now, going forward, Nomura notes that it is still possible for actually South Korea to get into the watch list. In case South Korea is put onto MSCI's watch list, the tentative timeline for South Korea to enter into MSCI's developed market index will be over a span of 1.5 to 2 years. Nomura says that an eventual inclusion of South Korea may only be in late 2024. The reason we are tracking this particular event is because South Korea currently actually accounts for almost 12.4% of MSCI EM index, and a reallocation of emerging market money may actually see net inflows into other large EM Asian markets. This implementation will prove to be a net inflow event for other EMs like China, Taiwan, as well as India. Let's look at India's impact. Nomura actually estimates a significant impact in terms of inflows into India and sees close to $26 billion of inflows into India. It is to be noted that this includes both active as well as passive funds, and Nomura also estimates that it may take as long as 7 days of average daily trading values in India to actually absorb this kind of inflows. To break up the total estimated $26 billion inflow, Nomura estimates that active fund inflow may be around $20.1 billion and passive fund inflow may be around $6 billion. Remember, active fund managers are likely to position ahead of the actual inflows, while passive index EM fund flows will only occur much later at the time of actual inclusion.
एक पैसा आने तो हम absorb कर लेंगे.
This is
7 days, 10 days.
But very, very, very interesting. But the only thing is that there is the if, whether if Korea gets upgraded to a developed market, And then even if that happens, I think the only slightly heartbreaking fact was the timeline. You're saying end of 2024 is when it'll happen, and then the reorientation with respect to India.
Don't be greedy now, Surya. This is like in office when you expect your you expect your boss to have a promotion.
I thought something was coming. I thought Prashant's going to be announcing something big on it.
The closest I can think of the analogy is like when you have a 1 day holiday in the week or a 2-day holiday, and then you come back the next week and you still want more. So greed is good, guys. Let's not forget that, right? Someone famously once said greed is good.
Should you're getting a truncated week next week, enjoy that. There's a holiday next week. So
Nigel tells us next Wednesday, right?
Always on top of that, yes. Okay, all right. Thanks a lot to Vivek for joining.
By the way, we are sounding very cheerful here, but the market is not, Nigel, right?
Yes, the market is still fighting around that mark. That 18,770, it broke by a few points odd, but the bulls, they're just trying to fight in there. We've got 15 minutes. That big slide has not come about because still the bulls are fighting in for that mark. You want to close above 18,770. And it appears as of now that range at least is getting defended. But Mitesh is back with us. He's been talking about stocks. Index has not impressed him too much today. Mitesh, give us a few buy or sell calls.
So, Nigel, I have right now only sell calls given the fact that, it's looking like the market will head towards the lower end of the range. So, Nestle is something which I would recommend as a STBT. Recommend selling here with a stop of just about levels of 22,700 or maybe 10 points above that. A target of around 22,200 on the downside can be looked at. Similarly, I have a STBT on Navin Fluorine, which I would recommend selling with a stop at about 4,600 for targets of around 4,470.
All right. And thanks a lot for that, Mitesh. By the way, HCC, that's the stock in focus. At the start of the show, we highlighted there was a large trade that changed hands, close to 4.5 crore shares odd. And after that, there were a couple of other blocks as well. The stock has now moved to the high point of the day. Volumes are massive out there. At around 2:30, that's when the block deal took place. And from there, it'll be interesting to see who are the participants to this particular trade.
Volumes, by the way, on HCC are basically all-time highs. I mean, we've never had volumes this high ever. On the NSE, I think that is about, we're seeing 23 crore shares on HCC, just on the NSE. Mitesh, I don't know if Mitesh with us. Mitesh, if you're there, sorry, the 20-day moving average for the Nifty comes in at about 18,650 or so. When you said we perhaps will go to the lower bound, I mean, is that what you meant around those levels in this leg?
So I've been talking about a range of 18,650 and 18,850 on the upside. 18,850, 860 on the upside, and broadly I think 18,650 below end. So yes, that's what I'm.
That's the 20-day as well, and that's the big one. I mean, big one in the sense, I mean, big one within a kind of shorter time frame. That's always a 20-day is significant in that sense. We're about 100 points away from that level on the Nifty. Time for a quick commercial break here. We'll come back. Ambarish will be with us with his stock idea. And of course, I mean, some color on the markets from Ambarish as well. We're back.
Incredible. I mean, obviously the real car is incredibly impressive and it has an amazing sculpture, but to actually manage to replicate those sculptural forms in Lego bricks is really impressive. It's amazing how they have managed with all the shapes and all the soft edges and everything. So I can imagine the work behind this.
It's fantastic for all of us to see this beautiful Lego model finally here in Legoland. We've been waiting for a long time. It's finally here and everybody loves to see it.
this is the best gift to Mumbaikars. Thanks to Maharashtra government, thanks to central government. This is the best gift. Very economical and very fast. You can save money, you can save your time.
If we consider human as a capital, then this might really help to increase the productivity, because the hustle of a travel really takes out a lot, and so it is directly proportional to the productivity of a human being.
It's been over a year since the launch of Mumbai Metro 2A and Mumbai Metro 7, and in this year over 2.5 crore people have already taken a ride on board these metros. The daily ridership is 1,60,000 commuters. That's a record in itself. But what's it that inspired those who made...
Welcome back. Well, market just holding on to those lows of the day. Reliance Industries has taken a leg down, which puts some pressure because that's the big heavyweight in there. So that's moved a little bit low. And the Nifty Bank, for some part of the session, well, was trying to put in a bit of a fight. It was doing a relative outperformance, actually, but that as well is buckled under pressure, down close to around 130 points odd. Amrish Balika joins us to help us out with some fundamental analysis. Well, Amrish, actually, it's a good day that you're joining in because people want to know what to buy. What's on your watch list? What are you looking to buy? And if you give us some rationale.
In fact, my pick today is Federal Bank. Although if you talk about overall banking sector, I have not been very bullish at this point of time, but Federal Bank actually stands out. I mean, though it's a south-based bank, but then it has an extremely good branch network across India, including Northeast, and more than 1,355 branches, nearly 1,900 ATMs, with more than 50% of these in semi-urban areas. Q4 was decent, especially after a record Q3 where they declared the highest quarterly earnings. Q4 NII was up about 25% YoY and about 2% lower Q on Q. And NIMs have topped out after showing 3.5 in Q3. Now they are at 3.31, and the management expects it to remain the same range for FY24. Deposits again were higher by about 17% YoY. Credit growth was about 20% higher. Asset quality is very stable. Gross NPA is about 2.26 and net NPA is about 0.69. Loan book 54% is retail, 46% is corporate, and they've been able to leverage on that fintech partnership extremely well. Look at the gold loan book that's been growing at about 15% and stands at about closer to about 20,000 crores. So the growth has been better than what the management guidance has been, and that actually gives me the confidence. And we have seen the stock consolidating in a band in the last few weeks. So I think it's a good level to buy this at the current levels with a target of about 180, which is about 1.5 times adjusted book value for FY25. And again, one of the reasons why I'm suggesting Federal out of the other banks is because I see the NIMs for all the other banks I think topping out in Q1. I think Q1 will be lower than Q4, whereas that's already happened for Federal Bank in the last quarter, and they've been talking of those stable NIMs going ahead. So that's one of the reasons why I'm suggesting Federal Bank out of the other banks.
Federal is Amrish's pick. Amrish, any thoughts on HCC? It was used to be one of the poster childs of the last big bull market.
Yeah.
But I guess a lot of people stopped tracking it, etc. But today, it's seeing a very large move. There's been a big block. Volumes traded at the highest ever. Any thoughts?
No, in fact, we've been hearing about this for the last couple of weeks. And if you look at the order book and execution, I think both these are decent for HCC looking at the price and looking at the market cap of the company. I think the only issue was the balance sheet. And what I'm hearing on the street is that things should be set right there. But again, this is only heard on the street, so there's no confirmation.
Okay, well, HCC got, apart from the promoters who own about 18% of the company, you have institutions like HDFC Trustee, you have Canara Bank, and then there are large foreign holders as well. It's a Mauritius-based fund, so not quite sure about the identity, but 7.5% with this Mauritius fund. So, yeah, there is a fair amount of institutional ownership, and we'll only know the exact identity of the buyer and the seller by later this evening. Amrish, hi. So Federal Bank is one such idea. Let's round it up with the controversy's favorite child, and that is Z. I mean, there's so much going on, right? Deal happening, not happening. I mean, one day the stock falls thinking it's off, and then it rallies saying, no, Sony is going to stay interested. I mean, for someone who's willing to play the Russian roulette, so to speak, this could be very interesting because the stock is at 180, deal happened at 320. What would you do with this?
See, there are two schools of thought. One school says that possibly this deal will not go through because of all the controversies which are there. The Sony Z merger may not go through. I am in the other school of thought where I believe that this deal will finally go through because whatever said and done, the promoter holding is quite low. And I suppose Sony would prefer that they have more professional management on board than the earlier promoters. So I think Sony should be in a much better position right now for this merger. And whatever controversies are there, they are the past. So I don't think they'll be carried forward post the merger. And I suppose all that will get settled before the merger, although the merger could take a bit longer. So, I mean, at this point of time, I would surely bet on Z from the point of view of the merger.
All right, Amrish, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. So that's basically Amrish with his perspective today. And Federal Bank is his stock for that he's tracking and he likes at this point. Now, let me just quickly wrap up things. So we will end at 18,772, which is down about 82 odd points. And I think the big turn happened, actually there were two big turns. One was right in the morning after about 10:30 or so when the market sold off completely. There was a big collapse all the way till exactly 1 o'clock in the afternoon. From 1 o'clock till about 1:50, there was a big recovery, which was about 100 points. And then came the next leg of the selling, which basically took us to the day's low at about 3:15. And we have a little bit of a bounce that we've seen as far as the close is concerned. So pretty volatile day. I would say though that I think what's happened in the mid-cap part of the market perhaps is something to note, because we've not had even a 1% fall in so long, right? I mean, on the mid-cap index, we had a 1.25% cut, and I think the small-cap index was down about 0.75% as well. Day before yesterday, I mean, actually, even when we started this week on Monday, we started with the point that RSIs, relative strength index on both the mid-cap and small-cap indices, 14-day simple RSIs were almost 90, hitting 90. Anything above 70 is overbought. We got that 1 day of correction. I think that was Tuesday. Wednesday, the market came right back. But today, again, we have a bit of a pullback which is happening. So dithering at higher levels, but there is certainly some amount of trepidation which seems to be starting to creep in. Surabhi.
Well, Prashant, just to highlight some of these mid-caps that have cooled off, like you're pointing out, because today's hallmark really is the mid-cap cool-off, along with the fact that the Nifty's had a slightly rough session. Look at the names. You've got IDFC First Bank down about 5.5%. That's, of course, on some of the negative brokerage reports that came in. But even beyond, I mean, financials have been weak. Aditya Birla Capital down 5%. M&M Finance down 4%. India Cements, which came out of F&O ban, is down 6% today. Spark, Sun Pharma Advanced Research, trending lower. Quite a few names. Data Patterns, a stock that's done well this year, that also cooling off. So lots of profit taking on the mid-cap side of the market. Even some of the other banks, PNB, RBL, some of the other lenders like REC, PFC. Basically a weak day for banks and NBFCs.
No, that's right. But Surabhi, we've got the stock right. Well, you'll be very happy. Ather Industries is up another 5% today's trading session. For this week itself, it's up close to around 17%. So that had a good run in trade today. A couple of these sugar-related stocks as well did well. Dalmia Bharat Sugar, that one was up close to around 6%. We had the management of MM Forgings who joined us. They're currently talking about doing 2,000 crores for the coming year, but they're saying by 2030, you'll have revenues coming out of the EV vertical itself, which will be another 2,000 crores. So MM Forgings goes home with gains of close to around 6% or thereabouts. What was losing out from the F&O stocks? Well, you had a few of those names in there. Vodafone Idea was down close to around 4%. Rain Industries as well was under some pressure, but otherwise, more or less a day where we saw some bit of profit taking, but should be at the end of the day, 18,770 has got defended.
Well, let's see whether the bulls can put up a fight tomorrow, last trading day of the week. We'll see what kind of handover we get from Wall Street, remember the Fed chair is speaking again today. He speaks before the Senate Banking Committee. So let's see if he gets more talk today. A bit of a breather in what has otherwise been a huge rally for the market. And I can't help but not say this, Prashant, 1 point away, right? Today we were 1 point away, and then we get this kind of turnaround.
Well, I think that's true. Absolutely, not quite there till you're there, right? I mean, 1 point. That's the distance that at the day's high we were away from the all-time highs. Okay, that's the close, and it's also a wrap on this edition of Closing Bell from all of us here in the studios, and of course the PCR. It's goodbye. Thanks very much for staying with us. Our Thursday special big deal comes up on the other side. Stay tuned.
We are joined by the Minister for Coal, Mines and Parliamentary Affairs, Mr. Pralad Joshi. Sir, thanks for speaking with CNBC-TV18. Sir, Coal India has finally concluded the wage revision with non-executive workers. Your first take on this?
It is a very happy moment because ultimately they have come to an agreement, both trade unions, management and all other concerned officers put together, they have worked it out. And considerably they have done it well. I think 19.5% something they have done it, and it is a quite motivational to all workers, and I am hopeful that by this very important and good revision, coal warriors will work with more enthusiasm, and even Prime Minister's direction was that the welfare of the coalman should be kept in mind. That also have kept in mind, and I congratulate Coal India management also.
When can we expect a fuel price agreement hike from Coal India? It had last taken place in 2018, and there has been a buzz that it is overdue. By when can we expect some development on that front?
In fact, I can't say that there will be it will be done or it will not be done, but I can only say that even when international prices are so high and our notified price is in keeping the overall interest of the public at large, we have kept it at 1534 notified price as of now, and we will see how, and let Coal India come with a proposal. After that we will see it, but it is a fact that now after the so much of cost escalation in production, that is the cost of the increase in the cost of production because of various factors, international factors rather, there is a need for that, but we will decide to do it or not to do it after consulting the Coal India management.
Sir, despite a late onset of summer this time around, we have a grueling season ahead of us. Also, IMD has predicted a delay in monsoon. What is the current status on coal?
Hello and welcome to Big Deal. I'm Nisha Poddar. Now, the consumer electrical sector is a very interesting space and is becoming more and more interesting at this juncture of its life cycle, with M&A as well as consolidation play likely to pick up in this space. Now, today I have with me a panel of experts to dive deep into the sectoral trends as well as the outlook going forward, including the potential that it carries. Let me welcome on the show Anand Ramanathan, who's from Deloitte India, Rahul Arora of Nirmal Bang Institutional Equities, and Rajesh Uttamchandani of Siska Group. Gentlemen, so good to have you on CNBC-TV18. Now, Rahul, I want to understand, this space is much smaller. A lot of brokerage firms also do not have the full coverage of this space, except a few big companies like Havells as well as CG Consumer Electric. What is your view on this particular sector and what can be done for more value creation? How do investors look into this?
So, Nisha, thank you for having me on the show. So, I think the most simplistic way, Nisha, to look at it is, the commentary that HDFC Limited typically gives, and that basically says that if 65% of India's population is under the age of 35, the average age of an Indian when he buys a home is around 37, 38. So that gives a very, very long runway for growth as far as housing is concerned. And if housing as a sector is going to continue to do well, this sector is a second order derivative, which will obviously continue to do well if housing does well. So that's sort of a simplistic way of looking at it. If you dive a little deeper, obviously, the sector has many nuanced parts to it. You go into appliances, electricals, cables, wires, fans, so on and so forth. But I think if you look at it in aggregate, Nisha, the way we're looking at it over the next couple of years, I think these companies, some of the ones that you spoke about and the other listed entities also, we're fairly sanguine that they could continue to grow their top line by about 15-16%. The good part, of course, Nisha, is that commodity prices, and a lot of these are very heavy commodity-driven businesses. And now with commodity prices coming down, I think there's a case for EBITDA and PAT to compound at about 22-23%. The only probably concern that the sector has today, Nisha, is valuations. Because, if you throw in a Polycab, Orient, a V-Guard, all of that into the mix, then all of these companies are probably trading at about 30 to 40 times on an FY25. So I think valuations in a near term are not entirely supportive. But if you look at it broadly, with the fact that housing demand is likely to be growing and these guys are going to be beneficiaries, and the fact that commodity prices are now probably going to go in your favor, this looks like a sector that could steadily compound its top line EBITDA and PAT by 15-20%. So, when we talk to investors, there is definitely interest, but, like they say in life, everything at a price point. But since we've been tracking this sector for over a decade, I think structurally we remain very, very positive on this.
All right, very positive, and some of the factors which are going to turn into a positive scenario for this particular space. But I would say that, the small ticket appliances or the electricals like fans as well as lighting especially are more akin to fast moving consumer goods in the electronic space. And that consumption has that potential been totally, capitalized upon is to be seen going forward. And of course, infrastructure as well as construction push are going to be two important factors going forward. But let's take it to a founder of a company. Of course, Rajesh, you are in a very, very differentiated space. You have cut a niche for yourself, especially in energy saving LED lights. How is the sector and the potential looking for a player like yourself?
Rightly asked. Actually, this trade is down the line from 4 or 5 years is business is improving because we are the first mover advantage. We got the first mover advantage by bringing LED space, and that is the rightly said, it is a power saving. And since in this trade also it is related with semiconductors, so the technology is frequently changing and the prices are going down, and on that basis quantity are increasing. So you don't find so much top line have changed in LED lighting space. So business is improving, business is increasing, and rightly said by the sir that space is every time it's a growth space, and a lot of infrastructure and all is increasing in India. So it's really a good trade, but the prices are increasing because of the change of technology. Previously, it's was driven by the driver and all. Now the DOV technology has come from where the consumption of aluminum in any LED product has gone down. So prices have gone down. So volume has increased. So you don't find too much a change in the top line of any company.
All right. So technology also has a huge role to play as it's evolving, and also energy saving as a thrust and as one of the biggest talking points where all the industries are steering towards. So that's also one important space that this particular industry is moving towards. Also, regulations are also getting aligned to rating the products based on energy savings. Now, Anand Ramanathan, in the immediate future, how do you see, because this is one sector which is also attached to cyclicality of commodity prices, and on the other hand there is seasonality factor attached to it. So how do you see it at the very moment when we are at the cusp of monsoon season?
Sure, Nisha. So I think, you just touched upon it, right? So the monsoon is going to be really critical. for not just this sector, but many of similar sectors which depend on rural India for their revenues. And you will see that there will be a cascading impact post monsoon in the festival season also. Typically, there's a sales uplift which happens during the festival season, right? So it is very important that we don't have this current deficit situation in monsoon continue. We will need to need for this situation to correct. And on the back of that, a good festive season will bring in cheer to this sector, because otherwise I think it's a good sector to play in. There is potential and there's headway to grow, but it is important that in the immediate term, some of these external factors play out in a way which is conducive for growth in this sector.
Right. So, Anand, let's also talk about the big, play that could be expected in this space, mergers and acquisitions and consolidation. What are the factors which are going to really drive this player in your view?
So, and not just this sector, but a whole host of sectors. There's a lot of unorganized market which is getting organized as we speak, right? And a large part of this is also regional in scope. So in that sense, we will need complementarities in terms of markets for M&A activity to work. And while it is important to look at synergy, it's also equally important to look at execution, because tactical things like distribution, looking at the influencer community, right? Because whether it is commercial or residential, you'll have electricians play a big important role. How is it that you take advantage of all of these demand side factors using technology and integrating in a way where ways of working, right, might be very different in each of these companies which come together. So how do you execute in a way where there is synergy that comes in and there aren't too many execution challenges, right? So that's going to be really critical as we look forward. Otherwise, it's a very attractive sector for consolidation.
All right. So the word is out from an expert that it's very attractive for consolidation. Rajesh, what is your view? Of course, smaller companies in your space, because of the regulatory requirements, the costs are high. Sometimes raw material prices also put a lot of pressure which the smaller players cannot deal with. And it's a very unorganized, large unorganized market in your area. Do you think that it is ripe for a lot more consolidation? And while the government is moving towards more uniformity and standardization of products in energy savings, do you think this will become a norm where the smaller players will not be able to adapt to it?
I totally agree with that, because a lot of local players are there, and they don't bound to be all compliances. They have to be regulatory compliances, all they have to do. So if government is strict on that, definitely it's a time of consolidation. But it's not for Cisca. That I want to clear you, because I am seeing some screen is showing something.
Right. But Rajesh, we did put out a story. Would you be open to a private equity investor also coming into the company for fundraising then?
Right. That we are there always.
Right.
And we want mostly see, I always feel we are keen on any joint venture outside India who brings the technology, R&D and design.
Yes.
Because tomorrow, if the company wants to go globally, you should have player like that who gives all technology, R&D, design. And it's not related with, as sir said, most of the people of age of 30, 35,
right,
they are mostly connected with IoT technology and all. So, yes. and what is the beauty in LED? It is all related with IoT products. So anything can be brought from the outside India or in India. That is needed, and how any brand can be upper with other competition or local player by getting some premium product, by getting some different products from the local players. So definitely young people, they definitely want to choose those products. That is the beauty in India. Then it's not alone price. Now you find people give respect to the brand, people give respect to the quality, and people give respect for the product which are different.
That's right, Rajesh. Of course, reliability as well as the brand recall is one of the mainstays of the consumption products like yourself. But Rahul, very quickly, how do you see the M&A and consolidation play out? And of course, after the break, we'll take it forward in details.
So I think, Nisha,